You know what it do best. Welcome back guys to our YouTube channel. This is your boy AK, your one and only mentor. When it got me. Guys, welcome to EDU-GURUS, home of hope. This is actually whereby your problems end, guys. Let me just give you guys more information about EDU-GURUS. I hope you can see my face there, guys. This is your one and only mentor, AK video, right? I just wanted like to share a video so that you guys can know me. But like, let me just stop it. I hope you can see me, right? So in today's video, we'll be focusing on the depreciation actually based on asset disposal, where we'll be depreciating an assets from the date of purchase to the date of sold. This is actually an issue when it comes to my learners, especially my grade 11 learners and grade 12. So this session is special for them, just like special for my grade 11 and my grade 12. Then I think before by the end of this week, I'll be issuing another video for my second year student. Yeah, still fixed assets, but now, guys, the standard, right? So now we are calling it PPE note. So before by the end of this week, I'll be issuing another video for PPE. Then for now, specifically focusing on my grade 11s and my grade 12s, because of like this thing is actually an issue. Most of my students, most of the grade 11 learners, most of the grade 12 learners, they make a common mistake when it comes to asset disposal, depreciating an assets from the date of purchase to the date of sold. So today, don't worry guys, I hope after this video we'll be able to go through that long process, right? So let me just give you more information about this lovely organization, EDU-GURUS. As you can see on the screen there, we have EDU-GURUS. We are the accounting Chinese. Actually, this is actually the organization that we formulated from last year, right? But then it started to operate well starting from this year, right, guys? So we are offering accounting tutorials from grade 11 to a second year tertiary student, right? We're offering free public services for our fellow grade 11, for our, actually not grade 11s, grade 11s, they have to go for private sessions because we offer free public service for our grade 12s and our second year student. And there's a second year student, you're talking about C2 second year student who are doing auditing. And we have a second year student, become accounting student, become law student, and education student, right? We are focusing on EAC 2608 module. That's the module that's whereby we offer free public services. And also when it comes to CUT, we have our first year student from education. Yeah, our students who are doing education, we're also offering them a free public service. So guys, please don't miss this opportunity, because of like this home of hope whereby we solve your problem. So this lovely organization here, we set our own questions. As you can see, I'm in a world here. As you can see, guys, this is my question, the question I've set for myself. So guys, I hope you will enjoy this lovely question right here. So yes guys, support us, like, share and subscribe, guys. Invite your families, your sisters, your brothers, anyone, guys. Then I hope you can see my description there, guys. As we started this organization, we have some few resources, as you can see. We are in a world page. We don't have like other apps that we can use to make like our sessions more professional, right? So guys, you're more than welcome to donate. If you are willing to donate, you're more than welcome to donate anything. Can be money. We will show you what we bought with the money. Don't worry. Anything that you're willing to provide with. It can be a headset, no problem. It can be a PC, it can be a mouse, a whiteboard, cookie, everything will be highly appreciated, guys. So please, if you are willing to donate to this lovely organization, or if you're willing to sponsor this organization here, you can WhatsApp my numbers 083 427 3112. Let me just repeat them: 083 427 3112. And also, if you need more information about this lovely organization, you are more than welcome to WhatsApp me. I'm available 24/7. Then instead of you contacting us or WhatsApping us, you can use our email address. Yeah? It's edu101gurus@gmail.com, right? Then let's just like take a quick break. Then we'll be back in a few seconds to discuss this lovely question here. Yeah, guys, welcome to a short break. Welcome to a short break. So now, it's like I've addressed everything there. I forgot to address something here. We also have a print that is running out that you can see in the video. I'm actually wearing my print here. So guys, you are more than welcome like to make an orders. You can make an orders via our WhatsApp business account, or you can also email us on EDU-101-GURUS if you want my print, guys. So guys, please, we deliver around South Africa via Pexi, but like then you have to like pay additional money for transportation and everything, right? So we deliver around South Africa, any province, we deliver via Pexi, guys. So please support us, like, subscribe, and buy our print. It's very cold, guys, as you can hear. As you can hear, it's very cold, guys. Very cold. It's very, 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 very cold. So buy our jerseys here. So soon we'll be showing you guys like our different prints, right? So guys, please place your order on time, right? Place your order on time. Then around Bloemfontein here, we make free deliveries. So if you're interested to have our print around Bloemfontein, you can just contact me. I will deliver your product whenever you are around Bloemfontein. I deliver everywhere, guys. So please place your orders. So please place your orders. So these jerseys, they start from 300 upwards, right? So if you're around Bloemfontein, maximum it's 200, right? Any color is available: yellow, black, orange, any color of your suggestion, guys, it's available. Then for those who are staying outside Bloemfontein, you have to pay for transportation. Pexi, guys, you have to pay for Pexi. So yeah, guys, so welcome to today's session where you'll be focusing on fixed assets note, known as a note 3. Like I said before, I've been tutoring actually since from 2019, while I was still also in high school. You will never believe, guys, I'm still young, as you can see my face here. I'm still very young. I'm 19 years old. I'm 19 years old. I didn't like to call out my name to my students, but like that, you have to know, guys, like I'm very young, right? I'm 19 years old, right? So guys, like I said earlier before, is that like today's session, we're focusing on fixed assets in note 3, right? So this fixed asset note 3, right, it's specifically focusing on diminishing balance method. The main issue that I saw most of the students making, like they always make this common mistake, always make mistakes when it comes to diminishing balance method, whereby you have to depreciate an assets from the date of purchase to the date of sold. So this activity will help you guys to know how to prepare your asset disposal account by depreciating an asset from the date of purchase to the date of sold. And also have additional activity here. So this additional activity, actually, it's not part of this activity that I'm in right about now, right? So we are going to do it separately because of like it also important, whereby we're going to use the carrying value method, actually the cost price method, whereby we're going to let our carrying value to be 1. I will give you guys more information about that. So for now, what I'm just going to do here, as I'm in a world here, I'm going to go through to this question with you guys together, analyze the information, and give you guys a good exam technique on how to analyze accounting information or a question paper of accounting, right? So guys, please listen attentively when it comes to this fixed assets of note 3, guys. I'm going to give you guys like more information about how to answer a question like this in note 3 activity, right? So guys, please bear with us. So like I said earlier before, we are going to focus specifically on disposal. We are going to prepare the ledger's account of disposal, like any account that is related to fixed assets or note 3, right? It's going to be a depreciation account. It's going to be accumulated depreciation account. It's going to be a cost price account, asset disposal account, and we are going to prepare our note, right? So guys, can I please stop sharing video? I hope you can see my face here. Don't worry, you're still going to see my face. For now, can I just please switch off the video and go to this question, and I will switch it off after I've analyzed the information here. So I'm going to analyze the information in the world here. Then I'm going to move to Excel to do my calculations, right? So please don't be confused, but in my Excel, I also like specifically when, like, let me show you, when it comes to the world here, when it comes to the hold, have EDU-GURUS sheet 1. So sheet 1 is specifically focusing on vehicle. This is going to be vehicle C accounts and a certain information that is related to vehicle, right? Then right about here, I have equipment. I have ledger's account of equipment here, and also some additional information about equipment. The very same information that you'll find in the world. But like then I want us like to analyze the full information in the world before we're going to move to Excel, right? Then under this, another under sheet here, under another answer sheet here, we have another question that is actually not related to this part of activity. Like I said before, it's separate to that activity, right? But again, we are also going to do it. So please don't be confused. So now I'm moving all along to the world to analyze the information. We're going to get more information about our activity. So here, guys, like I said before, we set our own question papers here, both basic and higher questions. From grade 11 to second tertiary student, we set our own question papers. So most of the time our videos will be based on our own question papers. But like then, you are more than welcome to comment on the chat box there if you like us like to do any question paper that you face some difficulties with, right? But most of our question paper, it will be based, actually most of our videos will be based on our own question papers. We're going to give you guys the basic questions and also the high standard question so that you can be able to apply your accounting skills, right? So guys, let's go through to this question. We have the EDU-GURUS here. EDU-GURUS question. Then we have fixed assets note. So here we have landed building equipment and vehicle. This actually the assets, 3 assets that we'll be focusing on for today's session, right? So let's go through to the information. It says the financial year of KEK Pty Ltd ended 29 February 2019. So this information is very important, guys. Please take notes of this information, whereby they say the financial year ended 29 February 2019. So this information will help you to prepare your financial period, right? Do you use this information to prepare your financial period? It's actually important to prepare financial period when it comes to accounting so that you cannot be confused about any additional information that you're going to get that is related or that is within this current financial period, right? So it's very important when you read this first information to prepare your financial period. Then I always advise my student to check the required after reading this information to check which current financial year are you supposed to prepare your financial statements on. Let's check the required here. Let's check the required. You are required to do the following for the year ended 2019 February 28 February 2019. So meaning this is actually the current financial year that we are supposed to prepare our financial statement within, right? So our financial statements will lie between the current financial year of 28 February 2019. Remember, if our financial year ended 28 February 2019, then it started from March 2018. Remember, your financial year always have to be within the period of 12 months, right? So let's check what they're required to do. You are required to prepare the general ledgers for vehicle and equipment, right? Then they say T account of cost. Don't be confused about this, but T account of cost, it's actually whereby there's a summary of the cost price only. If like we have additional assets, we are going to record only its historical cost price, right? If we have an asset that was disposed, we are going to record its historical cost price on this T account of cost. Don't be confused about that part. Then we are also required to prepare the general ledgers for accumulated depreciation. For both vehicle and equipment, we are required to prepare asset disposal for both equipment and vehicle. Then we have to complete the following fixed assets note Then let's check our fixed assets note. Here is our fixed assets note, right? So we are going to fill in that note there. Then going back to our additional information. So guys, take this into consideration to additional information. So this additional information is actually the movement that happened during our current financial year, right? Anything that happened during our current financial year, right? So we may have an assets that was brought into the business 5 years ago. Then during the year, something may happen about that assets. We may decide like to sell that assets. Assets may be destroyed, but like then we cannot just guess this asset was disposed without additional information. Hence, I'm saying like additional information, it gives you the current movements about the asset, what happened to this particular asset. Then let's check number 8 says A, we have the vehicle here, right? Then let's hear what happened about the vehicle during our current financial year of 1 March 2018 to 28 February 2019, right? Then let's continue with the information. He said, note that there were three vehicles in the business at the beginning of the financial year, right? So let's hear what happened about one of the vehicles. Let's hear what happened about one of the vehicles of 3 of them. We don't know, but the additional information will give us more information. Then another information, it says the vehicle sold. Guys, once you hear the vehicle sold, just know that there's a high possibility that in your questions or in you will be required to prepare assets disposal account, even though you're only required like to prepare your fixed assets note of note 3. But it's very important to prepare asset disposal account whenever we have an vehicle or any asset that was sold, because of like it will help you a lot like to prepare your fixed assets note, right? So this are very important things that you have to know when it comes to a vehicle that is sold. So when it comes to vehicle that is sold, you have to make sure that before you can prepare any asset disposal, or you can like make any movement about an asset that was sold, you have to make sure that you have the cost, you know the cost of that assets, you know the accumulated depreciation of that asset at the end, right? At the end, you also have to know, your selling price and your carrying value. So these are actually the most famous things that you have to look out when you're going to prepare your asset disposal account, or whenever we have an asset that was sold, right? We have to know its original cost price, its accumulated depreciation at the end, then the selling price, then the carrying value, right? Then let's hear our information. Let's continue with our information. It's a vehicle that was brought on the 1st of April 2014 was sold for 30,444 on the 30th of July 2018 for cash. Guys, right? So as we know, when we prepare our ledgers account, if an asset was sold for cash, therefore it's going to be recorded as bank in our ledgers account, but then we will go there, right? So remember, the first important things we are looking for into this information, or for us to prepare an asset disposal account, or any information that is needed about the vehicle or the asset that was sold, we have to make sure that we have the cost, accumulated depreciation at the end, then the selling price and the carrying value. So what about here? We are told that this asset was sold for 30,444. So this will be our selling price. So we are done with identifying the selling price, right? Then let's continue with the information. Say the cost price of sold vehicle, it is 108. So slowly we're still covering the criteria or the things that we have to identify whenever we have an assets that was sold, right? So this will be our cost price, right? This will be our cost points. Then accumulated depreciation, it's question mark X. We have to look out for our accumulated depreciation, right? Then my student, they be frustrated when it comes to this part. If you're not given accumulated depreciation, guys, it's cool. It's cool. It's cool. Don't penetrate, don't do anything. It's cool. You have to calculate your accumulated depreciation. This is actually a problem, and it is tested. It is tested a lot when it comes to grade 11 and grade 12 question papers. So guys, please bear with us. Bear with us. So if the question come like this, right? If the question come like this, you are given the selling price, then you're given the cost. Just note that if you're not given accumulated depreciation, you have to make a lot of calculations, right? So if you're not given accumulated depreciation, they're supposed to give you the date when the asset was bought, right? The date when the asset was bought. So according to this information, we are given the date when the asset was bought, right? So therefore, we can calculate our accumulated depreciation. But that's not all. We also have to know which a method that we're supposed to depreciate our assets on. So this is vehicle. Yes, it's vehicle. Yes, it's vehicle. So which method does the entity use to depreciate their vehicles? Let's continue with our information to get more information about that. Note that this was not recorded in the book of the business. Very important information. So it tells you that like this information of a sold vehicle, it was not taken into the book of the business, right? We are still coming there. Then we are continuing with our additional information. It says a new vehicle was bought on 30 September 2018 for 120. For 120. Then I want to clarify this. But then after going to the second point, right? Let's read the second point. What does the second point says? It says the business used the diminishing balance method. Remember, I've said to you, if you're not given accumulated depreciation here, you have to have what? You have to have your date of purchase, right? Then you also have to know which method does the business use to depreciate their assets, right? Then the second bullet that was stated, it says the business used the diminishing balance method at 20% to depreciate their vehicle. So therefore, if we know when the asset was bought, or was purchased, then we know which method does the entity use to depreciate the assets. Therefore, we can calculate accumulated depreciation, right? If the information is not like that, then return the question paper to the examiner or the invigilator. Return it, guys. There's no way you can calculate accumulated depreciation without knowing when the asset was bought, and also the recommended method that the entity used to depreciate their assets, right? Then going back to the first point, right? It says a new vehicle was bought on 30 September 2018 for. So if you can prepare our financial year, remember our financial year starts from March, right? It starts from March, April, May, June, July, August, September, October, November, December, January, February, right? Then it says it ended when? It ended 2018, or financially end 2018, right? No, actually 2019, right? Because of 2018, it's actually the beginning of our financial year, March 2018. 2018, right? So remember, the recommended method is to use the diminishing balance method, or the carrying value method in short. So what do we mean when we talk about the diminishing balance method? Remember, the diminishing balance method formula is cost subtract by our accumulated depreciation, right? Then we're going to get our carrying value. Then we are going to depreciate our assets based on its carrying value, right? So let's talk about this. Let's talk about this first point, whereby the assets, it is bought during the current financial year. So it says here our asset, it was bought on the 3rd of September, right? So these assets will start to operate from the 1st of October to February during the current financial year of 1 March 2018 to 28 February 2019, right? So we can all agree that like we are not going to be able to apply the diminishing balance method. We are not going to be able to apply the diminishing balance method during the current financial year when the assets was bought. Like now we are in the current financial year of 2018 to 2019, right? So this assets is new, and actually this is actually the current financial year that we're in now. This asset is new, it have not yet depreciated. This asset would only depreciate at the end of February 2018. That's when the assets will start to depreciate. So in short, if we are required to apply the diminishing balance method, then the asset it was bought during the current financial year that we are in right about now, the diminishing balance method, it will not be applicable. The reason being, the assets it have not yet depreciated. It will start to depreciate at the end of the year. Then in the following year of the current financial year of 2019 to 2020, because of now we will be having our accumulated depreciation at the beginning in that particular year. That's whereby we can use the diminishing balance method. But then in this case, whereby the asset it is bought during the current financial year that we're in now, it have not yet depreciated, it's brand new, it will only depreciate at the end of the year. It's the same as us applying cost price method. Because of our accumulated depreciation, it is 0. I don't know whether I'm making sense. If you don't get it, you can just go back to the video or comment on the chat box there. But then let me just repeat my point. If the new assets it is bought during the current financial year that we're in right about now, it is brand new, it have not yet depreciated. Remember, what do you mean when you're talking about accumulated depreciation? It's actually the value that the assets have lost since from the day it has started to operate or the day it started to be brought into use. That's whereby accumulated depreciation occurs. It's the total value the assets have lost from the date it started to operate to the year that we are in now. I don't know whether I'm making sense. That's what we mean when we're talking about accumulated depreciation. So because this is a new asset, it's a brand new assets. During the current financial year that we're in, it have not yet depreciated. So therefore, it's the same as us applying the cost price method. But like then, we are going to attest that, right? So now let's continue with information B. We have land and building here, right? Sorry, we have land and building here. Then it says, note that on the 1st of December, if you go to our current financial year, on the 1st of December it's here. What happened on the 1st of December 2019? There was an extension of the building and the repairs, right? Then the repair cost about 150,000. Very important information, guys. We're not talking about the extension of the building. We're talking about maybe the entity maybe have extended something. They've extended some of their building and made an office there or anything of their choice. But like then there was an extension of the building. But then we're not talking about the repairs, guys. A repair, it's not an asset because of the repairs. It cannot produce economic resource, but like then you can just like use the repairs to make our building to look good to our customers, like the reputation, guys, the reputation. We don't want to be unprofessional. So we are going to fix whatever that is in the building. So the repairs, they are expenses. They are expenses into the business. It's not an asset into the business, right? It's not an asset because of like the repairs. They actually don't last for a long time. We just pay them during the particular current financial year. Then you're done. But then we're not talking about an extension. We're going to talk about like a long-lasting thing. Hence, we are saying like it's an asset. It can produce economic benefit. But like then let's not like talk more about that part. Bear in mind that only the repairs are going to be recorded as an expenses. We are going to record them under operating expenses in our income statement. But the extension here is going to fall under note of fixed assets note as additional assets, right? I hope it makes sense. Then let's move all along to the equipment. Like I said earlier before, here into this activity, I just only tested the diminishing balance method, right? Because of like, it's a problem to most of the students to apply the diminishing balance method, especially whereby you have to depreciate for a long period of time, right? So today I'm going to solve that problem. So even my equipment too is based on diminishing balance method, but then let's go to our information. It says the business used the diminishing balance method to calculate the depreciation for equipment with the rate of 10%, right? Then it says on the 1st of June, which is actually during the current financial year that we are in right about now, the new equipment with the cost price of 50,000 was bought. The new equipment was bought. Remember, I said to you, whenever we are required to, whenever the entity use diminishing balance method to depreciate their assets, but like then if you buy a new asset during the current financial year, is the same as us applying the cost price method, because of like the assets have not yet depreciated. So please don't forget that part, guys. Then one of the equipment that was bought on the 1st of March 2015 was sold on the 31st of October 2018. So remember what I said to you. I said whenever you heard about sold, right? What are most important things that you have to look out for? You have to look out for your cost. You have to look out for your cost. Your accumulated depreciation at the end. Then your selling price. Guys. These are the most important things that we have to focus on, right? Cost, accumulated depreciation, selling price, and you have to make sure that you have your carrying value, right? You have your carrying value. Then let's go to our additional information, and I'll highlight some of the things that is needed into this part. The cost, we're going to highlight the cost, accumulated depreciation, selling price, and the carrying value, right? But like then in most of the cases, right? In most of the cases, there's high possibility that the entity may sell the assets with its carrying value, right? So therefore, our carrying value and our selling price would be the same. Right? So even though in case whereby the asset is donated, to the entity or whenever organization that entity decided to donate the assets with, we still have to look out for the cost, accumulated depreciation, but then selling price, it will not be required because of like the business did not sell the vehicle or whatever assets that they have donated. So therefore, there is no economic benefit there, right? There's no economic benefits or commercial benefits there. So SP or the selling price, it will not be required. But like then all of these things would be required. The reason why I said all of these things have been required, because of like, these are the major things that we take into consideration whenever we buy an asset, right? If we buy an asset, we take into consideration its cost price, right? We take it into consideration its accumulated depreciation, right? We take it into consideration. We prepare the cost price method. We prepare accumulated depreciation assets, right? So meaning whenever we buy an asset, our account, they keep on increasing, okay? We have some additional assets on top of what we have. So in case whereby we are going to dispose of an assets or donate an assets, it would be a vice versa. Whenever we recognize an asset or whenever we buy an asset, our account increases. But whenever we are going to dispose or donate an assets, therefore we are no longer having those assets into the book of the business. So it's a reversal. We have to show the effects into our accounts or into our accounting entries, financial statements to show, okay, we were having an assets. We bought an assets on the 1st of March 2014. Our cost price account, it have increased. But now when it comes to the 31st of October, we decided to dispose an assets. We have to show into the book of the business that we sold an assets with a negative sign. When we buy, remember, when it comes to the cost price, when it comes to the cost price account, it's an assets account. It increases on the debit side, then decreases on the credit side. Whenever we buy, it increases on the debit side because of like there's an increase of the assets. Then whenever we sold, we show that we have taken out these assets into the book of the business. So therefore, the same cost price, it will be credited. I don't know whether I'm making sense. Then let's talk about this accumulated depreciation. I want to show you guys the importance why I say these are the major things that we have to focus on. Accumulated depreciation. Remember, an asset that to depreciate from the date of purchase. Whenever we are going to use an assets, from the date that we started to use an asset depreciate, right? Even though like nothing happened to that particular assets, but at the end of the year, whereby we are going to close off our book of the business, we are going to show the depreciation of that particular asset to show that, okay, this asset, it have lost this much since from the date it was bought. It can be during the current financial year, it can be at the beginning of the financial year, it doesn't matter. But again, we will show the effect into the book of the business to show this assets, it have depreciated or it have lost this value from the day we started to purchase it. Therefore, our depreciation is going to be affected. Our depreciation is going to be affected to show, okay, these assets, it have depreciated. Then its county account is going to be what? Its county account is going to be accumulated depreciation. So whenever an asset depreciate, accumulated depreciation account is always affected. So even though we are going to sell, these assets or dispose of these assets or donate these assets, the same accounting entries that we used to make from the day we started to depreciate these assets, we have to do the reversal of it to show that, okay, we've been recording this, now we are now recognizing assets or are taking it out of the book of the business. Accumulated depreciation and account is a liability account, equity account. It increases on the credit side, then decreases on the debit side. So whenever we are going to depreciate or whenever an asset depreciate, it is always affected on the credit side. So if you are going to dispose it, we are going to add all of those depreciation we've been crediting. We are going to add all of them. Then the total of it, we are going to show it on the credit side. But again, let me just not confuse you. We are still going to that part. But now I'm just analyzing the information with you. I'm just showing you guys why I say this are a major thing that you should focus on, right? Let's continue with our information. It says on one of the equipment that was bought on the 1st of March 2015 was sold on the 1st of October with the selling price of 102,061, right, for cash. So therefore, we already have our selling price there. Then we are given the cost price of that sold vehicle. We are done with the cost price. We are done with selling price. Right, so now we are moving all along to our accumulated depreciation here. Accumulated depreciation. It's also a question mark. Whenever you see a question mark here, just know that you have to do a lot of calculation, right? But like I said to you, if it's a question mark here, they have to give you what? They have to give you the date when the asset was brought or bought. Right? They have to give you the date the asset was bought, right? And also they have to give you what? They have to give you the method that the entity used to depreciate the assets. We are given here. They said like the entity used diminution balance method to depreciate their equipment at the rate of 10%. So therefore, we can calculate our accumulated depreciation. Then they said, note that this was not recorded into the book of the business. Very important information, meaning this was not taken into consideration into our note 3. Into our ledgers account, it was not taken into consideration. As you can see by yourself, this note 3 of us, it is empty. It was not recorded. But then we are going to fill in that note 3. We are going to make accounting records. Then you are required to do the following for the year ended 28 February 2019 to prepare what? Prepare general ledgers, to prepare general ledger of vehicle and equipment. Like I said, this is a tier account of the cost. Then you're required to prepare accumulated depreciation for both vehicle and equipment. Then the asset disposal of both equipment and vehicle. Then you're required to complete the following fixed assets note, which is given here, right? And that's the end of our activity. Then now we're going to move all along to additional activity. Then very important information when it comes to your depreciation. When it comes to your depreciation, guys, make sure that like whenever you're going to depreciate an asset, check whether like did your asset depreciated more than it worth? Did your assets depreciated more than it worth? Right? Let me just give you let's just go to a short break before we are going to discuss that part. Did your assets depreciate more than it worth? Let's just take a short break, then we will discuss it. You know what to do best. It's still your boy AK Kivita from EDU-GURUS, one and only mentor. You got EDU-GURUS, then you got it all, no worries. Welcome to Home of Hope and of your problems, guys. Here we are addressing each and every student a problem. So guys, if you face some difficulties about any topic, guys, please comment on the comment box there. You are more than welcome to comment, give feedback about the session, everything, guys. Feel free, freedom of expression. So guys, yeah, we're still continuing with the session. Remember, in today's session, I'm specifically focusing on fixed assets note 3, right? So we are done analyzing the first information. So now we are moving to additional activity, which is very important, guys. So remember, in our first part, we specifically focusing on the diminution balance. I was testing actually the diminution balance method, right? I was testing diminution balance method and the disposal too, guys. So I hope after this presentation, you guys will be well. Then, guys, the print is still going on, guys. The print is still existing, guys. The print is still running out, guys. The print is still running out. You can find my print anywhere around South Africa, guys. Anywhere around South Africa. We deliver via Pexi, guys. We deliver via Pexi, via in Gauteng. Anyway, guys, we deliver via Pexi. Then if you're still in about Bloemfontein, it's a free delivery. Then our cost start from 300 rand, guys. Our cost start from 300 rand. So if you're around Bloemfontein, you just place your order via our email address or via our WhatsApp. Via our WhatsApp 083-427-3112. Then our email address is edu101gurus@gmail.com, guys. So please, guys, please place your orders. But then if you are far away from Bloemfontein, then you have to pay for transport, guys. So guys, anyone who's willing to donate to this organization, guys, you're more than welcome also to WhatsApp me. You're more than welcome to email me edu101gurus@gmail.com. Any sponsor, if you want to sponsor the Gurus, we really appreciate that. You are more than welcome to also contact us 083-427-3112. Please don't call. You can just send me a WhatsApp. You can just send me a WhatsApp text here, or you can just email us on edu101 EDU-GURUS@gmail.com. We will leave everything there. We will leave everything there. You can donate, you can donate or sponsor us with projector or whiteboard, PC, mouse. Everything will be highly appreciated, guys. I share anything that will help us to be able to make our sessions more professional. We will really appreciate that. We really appreciate that. We really appreciate that. Tango means thank you, guys. Then we are still continuing with our additional activity. So this additional activity, guys, is specifically focusing on how to apply one rent rule. Please, this activity is specifically focusing on how to apply one rent rule. Most of my students, or most of the students I've been tutoring or I've been teaching, they actually face some difficulties on how to treat this carrying one rent rule. When do we apply one rent rule? Very important information. We apply one rent rule when the assets have depreciated more than its cost price. Right? When the assets have depreciated more than its cost price. Right? So guys, why do assets depreciate more than its cost price? Very important information to take into consideration. The assets can depreciate it more than its cost price if it have reached its useful life, right? Even though we have a long-term assets, they're also limited for certain years. They can operate for certain years. They cannot operate for the whole life. No, that's impossible. And assets, it's limited. But then it can operate more than 12 years. But then it is also limited to certain years, right? So if an assets, it's been operating more than the certain years that is expected to operate, then unfortunately these assets will depreciate more than its cost price, because of whenever we are using an assets, it always depreciate. Whenever we use an assets, and an assets depreciate. So if the useful life of an asset is 5 years, then we decided to overuse that assets, then that's whereby the assets will depreciate more than it cost. Let's say maybe this assets it can be used only for a period of 5 years. Then after 5 years, we decided, okay, I'm going to use it because of it's still productive. It's still productive. It's still going to benefit. It's still going to produce whenever I want it to produce. But when it comes to your accounting entries, unfortunately, that assets will depreciate more than its cost price, because of it have reached its useful life. It have reached the years it's expected to operate. I don't know whether I'm making sense, right? So let me just take you through to this one rent rule, guys. So very important information when you apply cost one rent rule. You have to make sure that you have your cost. Make sure that as always, make sure that you have your cost. Are you guys aware that the very same analysis that I've applied into the disposal is the very same analysis that I will apply into this part whereby I'm going to apply a one rent rule. Fixed assets note, these are the major important things that you have to take into consideration. Cost price, accumulated depreciation, accumulated depreciation at the end, your carrying value at the beginning, and yeah, that's all. So now let's talk about this, how to apply one rent rule. I've told you, okay, we are going to apply one rent rule when the assets have depreciated more than its cost. And I told you when or why the assets depreciate more than its cost price, right? So now these are the major things that you have to take into consideration. Please, guys, make sure that you have the cost of your assets in each and every assets you take into consideration. Please make sure that you identify this thing first before you can make your final decisions about your depreciation. Before you can make your final decision about your depreciation, just make sure you calculate your cost first, you calculate the accumulated depreciation at the beginning, then you have your depreciation, then you calculate the accumulated depreciation at the end. So if your accumulated depreciation at the end it is more than your cost, then that's just to know or take into consideration that we are going to apply one rent rule. So because of like this one thing that confused people, that confused of most of my learners, my grade 11 and my grade 12 learners, because of like when it comes to grade 11 and grade 12, your question are not specific, guys. Your question are not specific. They don't tell you that the equipment it can be used for a period of 5 years. 5 years is our useful life. They don't clarify that. They don't give you guys that information. They don't give you guys that information. They don't give you guys that information that the equipment it can be used for 5 years. No, but you have to find it for yourself. You cannot identify the useful life. But like then by doing this, identifying your cost, your accumulated depreciation at the beginning, your depreciation and accumulated depreciation at the end, you will be able to identify whether this asset it have reached its useful life or not. How do we identify that? How do we identify whether the assets have reached its useful life? If our accumulated depreciation at the end it's going to be more than the cost price, then just know that that particular assets it have reached its useful life. Therefore, we have to apply one rent rule. I've said it all. I've said it all, guys. I've said it all. That's actually what you need to do. Because of like these questions of grade 11 and grade 12, they're not specific about the useful life. They cannot tell you that this asset that was bought on the 1st of March 2015, it can be used for a period of 2 years. No, they don't specify that. So please, these are actually the most of the major thing that you have to take into consideration so that you can identify that by yourself, right? So now I'm going to take you through to this example. I'm going to make a practical example here so that you guys can understand how to apply one rent rule, right? But like then let me just clarify everything that I've wrote down here, right? We're going to identify the cost as well as the dollars given. Then accumulated depreciation at the beginning, it's up to examiner whether he or she will give you accumulated depreciation or not. But like then always remember, if accumulated depreciation at the beginning, it is not given, you can therefore calculate it, but then you have to make sure that you know which recommended method are you supposed to use first. Then they will provide you with the rate. And again, you have to make sure that like you know when that asset was bought, right? Take that into consideration. The very same information or the very same analysis that we've used before we went to break is the very same thing that will be applicable to fixed assets. Whenever fixed assets that you're going to make, guys, these are a very important thing that you have to take into consideration. Then your depreciation, then accumulated depreciation. Remember, your accumulated depreciation, its formula, it's actually a combination of accumulated depreciation at the beginning and the current depreciation. It will give you how much, it will give you accumulated depreciation at the end. Then just make sure that you have your carrying value. Carrying value is actually, the formula, it's cost subtract by accumulated depreciation at the beginning or subtract by accumulated depreciation at the end. But please, when it comes to whereby you have to apply one rent rule, please, very important, make sure you calculate your carrying value at the beginning. After you have done identifying your cost, accumulated depreciation at the beginning, your depreciation and accumulated depreciation at the end, then you find out like your accumulated depreciation at the end is more than your cost price. Then this is what you have to do. You have to find your carrying value at the beginning, right? How do you find your carrying value at the beginning? You take your cost, subtract your accumulated depreciation at the beginning. It will give you what? It will give you carrying value at the beginning. So if your accumulated depreciation at the end, it's more than the cost, we apply one rent full, right? Take that into consideration. So if that is the case, whereby a one rent is applicable, therefore your carrying value at the beginning, it's supposed to be less than your depreciation. If you apply one rent rule, the accumulated depreciation, it's more than the accumulated depreciation at the end is more than what? It's more than your cost. So therefore, you do what? The first step that you're going to take after identifying that, you calculate your carrying value at the beginning, which is cost subtracted by accumulated depreciation at the beginning, right? Then you will get what? Your carrying value at the beginning. Your carrying value at the beginning that you've calculated here, it's supposed to be less than your depreciation, right? It's supposed to be less than your depreciation because of the very same carrying value at the beginning here that we're going to calculate here is the one that we are going to let it to be your depreciation. Is the one that you're going to let it to be your depreciation after subtracting it by 1. Let me just not talk a lot because if I'm going to confuse you, let's do a practical example, right? Let's say that our cost price is 20,000. 20,000. Then our accumulated depreciation at the beginning, it's 19,000, right? And let's see, our depreciation is 5,000. Let's say our depreciation is 5,000. Our depreciation is 5,000. Then therefore, remember, for us to get our accumulated depreciation at the end, we have to take what? We have to take our accumulated depreciation at the beginning plus our current depreciation. How much will be our accumulated depreciation at the end? It's going to be a combination of 19,000 plus 5,000. It will give us how much? It's 19,000 plus 5,000. It will give us 24,000, right? It will give us 24,000. And our carrying value, right? Our carrying value that we're supposed to be focusing on, it's the carrying value at the beginning, right? Carrying value at the beginning was the formula of calculating the carrying value at the beginning. But before you can go there, are you guys aware that my accumulated depreciation at the end, which is 24,000, it is more than my cost price of 20,000. Then that's where I can conclude that I'm going to apply 1 rent rule. Why? Because of my assets have depreciated more than what it cost. My assets have depreciated with the value of 24,000, but it cost 20,000. Remember the reason that caused that? It's whereby the asset it has reached its useful life. That's whereby it can cause our accumulated depreciation to be more than our cost, meaning we have been using it even though it has reached its useful life. You have been using that asset, so therefore it will depreciate more than what it cost. So therefore, by just taking that into consideration, I can take the decision that I'm going to apply what? A 1 rent rule, right? Remember, if you're just going to take this accumulated depreciation as it is and its cost here, we are going to get a negative amount. We are going to get a negative carrying value, which is not in accordance with our historical cost principle. It's not in accordance with the historical cost principle because of according to our historical cost principle, all assets are recorded with its historical cost or with its original value. So according to historical cost, it forced us to apply carrying value to it forced us to apply 1 rent rule because of we cannot have a negative assets, right? We cannot have a negative assets or a negative amount, right? So what's the next step after identifying or after saying that our cost is actually less than our accumulated depreciation? The next step is to identify your carrying value at the beginning. Remember, the carrying value at the beginning, it's cost, subtract by our accumulated depreciation at the beginning. What is our accumulated depreciation at the beginning? 90,000. Then what is our cost? Our cost is 20,000. So if we take that into consideration, we're going to say 20,000 subtract by 19,000. It will give us how much? It will give us 1,000 rand. Like I said before, when you calculate your carrying value at the beginning, it is always less than your depreciation. As you can see, your carrying value at the beginning is 1,000 rand, right? Your carrying value at the beginning is 1,000 rand. Then your depreciation is 5,000 rand, right? So your carrying value, it is less than your depreciation. So therefore, we are going to let our carrying value at the beginning to be our depreciation, but after subtracting 1 rand from it, right? So now if we're going to take our records here, we are going to say therefore our depreciation is equals to 1,000 rand subtract by 1, right? How much am I going to get? I'm going to get 999. Sorry, yeah, it's 999, right? going to be, yes, it's 999, guys. Sure. So this is going to be what? This is going to be our current depreciation. Why? Because of like, if we are going to add this depreciation into our accumulated depreciation at the beginning, it will give us more. It will make like our accumulated depreciation at the end to be more than its cost price, right? So therefore, we cannot consider our assets it's a negative amount. Therefore, we have to apply our one rent rule. We have to apply our one rent rule. So we cannot take this depreciation into consideration because of like it will lead us to a negative assets or to a negative amount, which is not in accordance with the historical cost principle, right? So hence you have to calculate your carrying value at the beginning first. After calculating your carrying value at the beginning first, then you're going to get your carrying value you're going to get a carrying value at the beginning, which is less amount than our current depreciation. Therefore, for us to identify our current depreciation, we have to take that 1,000 rent or accumulated or our carrying value at the beginning, subtract it by 1 to get our current depreciation, right? So now our accumulated depreciation at the end, it will no longer be 24,000. It will no longer be 24,000. It will be accumulated depreciation at the beginning plus the current depreciation that we have calculated of 999. Our accumulated depreciation at the end, it will now be how much? 19,000 plus 999, which will be how much? 19 plus 999. It will give us 19,999. Right, guys? So this will be our accumulated depreciation at the beginning. So if we are required to prepare our fixed assets around note 3, the last part there, we are going to have the cost price as how much? As 20,000. Then our accumulated depreciation at the end as how much? Is 19,900. Then our carrying value, remember, as always, our accumulated depreciation here, it's always in brackets, right, guys? It's always in brackets. Then how much would be my carrying value? Remember, my carrying value, it's how much it's cost. My carrying value formula, it's cost subtract by accumulated depreciation. So if I'm going to take the cost of 20,000, subtract my accumulated depreciation of 19,999, I'm going to get a positive amount, which is 1. Therefore, we have applied, or we have actually complied with our historical cost principle, whereby we cannot let our assets to be a negative amount, but then it's considered as a positive amount. So therefore, we have applied the one rent rule. So if you're still confused, guys, please comment on the chat box there. Please comment on the chat box. Please don't forget to like, subscribe, and share the link to your fellow family members, your classmates, and everything. We really appreciate that. So if you guys still don't understand the carrying value method, the one rent rule, you can go back to this video. But don't worry, guys, we are still going to do an activity. This was just like an example to give you more, because of like while I'm going to do the activity here, I'm just going to read the information and do application without explaining like I did explain here. So please, guys, this is actually a very important part, a very important example than ever. I hope this video will be beneficial, and together with my example too. But because of my example, it's more clear. I've given you guys more information, more than your level though. This is actually not in your level, but again, I hope my explanation and everything will help you guys. If you still don't understand the carrying value method, you are more than welcome to WhatsApp me. You can book a session via our WhatsApp or via our email address. guys. So we are going to take a quick break. Then after our break, we are going to move on to the Exceler to do the calculations. Now we are going to do the activity. Remember, we were just like analyzing the information without doing the activity as it is. So guys, bear with us. We are still together pushing the content. So my fellow K11s, my fellow K12s, I really appreciate your comment. I would really appreciate your comment. So please guys, don't forget to like, subscribe. You know the vibes. This is still your boy EK video from EDU-GURUS, your one and only mentor. If you got EDU-GURUS, guys, then you got it all. Welcome to Home of Hope, whereby we are going to take your problems into consideration, whereby we are going to address each and every student problem. Tango means thank you. Let us just take a quick break, then we'll be back. We'll be back. I think when we come back, I'm not going to share the video. I'm not going to share the video. I hope like you've seen me enough. It's enough. So guys, let's just go and take a quick break. Just grab your water. Don't take a coffee. Don't take a drink. We're still in the session. Still in the session. Just go and grab the water, and we'll be back soon. Tango means thank you. Then I'm out. You know what I do, guys. You know what I do, guys. This still your boy EK video from EDU-GURUS. You know when I got EDU-GURUS, then I got it all, nigga. So guys, please don't forget to like, subscribe, share, and comment, guys. Please, like on a chat box there or on a comment box there, you can share your feedback about this video. You can share any question that you would like us to present in our next videos. So guys, yeah, let's continue with this activity without wasting any time. Remember, the print is still available. Any sponsor, you can contact us. Then let's just continue with this activity. Remember, we are still doing fixed assets or no tree, specifically for our grade 11 learners and grade 12 learners, right? So now guys, I'm going to share an Excel. As you can see in the screen, I'm going to share an Excel. So as you can see, I have sheet 1 here, I have vehicle, then I have equipment. So any information that we have analyzed from our world here, that like I've shared, firstly I've shared the world and shared the whole information, right? So here like I've like separated them. So under the vehicle, it's only the information that you will need to do your calculations for vehicle, all the information that is related to vehicle. Then when it comes to equipment here, it's actually all the information that is related to the equipment, right? So please don't be confused, guys. Please don't be confused. I'm not going to share on my video on my face now because of that. I'm going to be deep in my doing calculations with you. I'm not going to talk about more about this information because of like we have analyzed the information before in our world. The very same information that is here, guys, the very same information that is here in the world here is the very same information that you see there, like the very same information, but like then when it comes to Excel here, like I've separated them. So when it comes to this one, it's the additional activity whereby we are going to apply one rent rule, guys. So let's start with our calculations for vehicle, right? So as you can see, we have our cost at the beginning, but like then according to our fixed assets note that was given there, let me just share here with you guys. According to the fixed assets note that are given there, we don't have our accumulated depreciation, but like then we can identify it because of like we have the carrying value and the cost price. Then remember, for us to get the carrying value, we take what? So we take our cost subtracted by accumulated depreciation. So for us to identify accumulated depreciation here, if we have the carrying value and the cost, we are just going to take our cost price, subtract by our carrying value, then it will give us our accumulated depreciation. So guys, please don't be confused. Like this is what I did here. For me to get my accumulated depreciation at the beginning, I taken out my cost subtract by carrying value. Then I come across accumulated depreciation of 200,000. Then we have vehicle here, vehicle information. Remember, This is more like additional information, right? Then remember what I said to you, additional information specifically focusing on the current movement, right? Then it says, note that there were 3 vehicles in the business at the beginning of the financial year. Remember, according to our analysis, our financial year ended 28 February of 2019. Then if our financial year ended 28 February 2019, then our financial year started on the 1st of March 2018. With that information, guys, first of the thing that you have to do, let me just write my workings here. My workings, I don't want to share them more from time. I wanted to go through these calculations with you guys, right? Then I'm going to prepare my financial. I'm going to start first with March. Let me just say in brackets 2018. In brackets, we have 2018. 1st of March. I'm not going to write full March because I'm just going to say M, then March, then we got April, then we got May, then we got June, then we got July, then we got August, then we got September, then we got October, then we got November, then we got December, then we have January, which is actually the new year starting. So now we are in 2019. Then we have February, where is actually the end of our financial year, right? So guys, this is our financial year. Let's hear what happened during this current financial year of 2018 to 2019, from the 1st of March 2018 to 28 February 20.90. Let's hear information. Says that note that there were 3 vehicles in the business at the beginning of the year, meaning here, right? On the 1st of March 2018, we were having how many vehicles? We were having 3 vehicles. Then let's check. Remember, I said to you, whenever you see the sold part, what the most important that you have to take into consideration, you have to take your cost into consideration. Let's identify our cost here. Let me just say disposal. Please take in consideration that we are dealing with the workings here, right? So this is going to be what? This is going to be our workings. Let me just have a heading here. My workings. Let me just highlight my workings here, right? So that it can be clear. This is my workings. Then this will be my disposal workings. Disposal workings. So remember, I said to you, whenever we have the disposal, first of all, for those things that we have to identify is our cost price. Let's check the information. Does the information give us more information about the cost price of the sold vehicle? Definitely, it have to be given. A vehicle that was bought on the 1st of April 2014 was sold for 30,444. So therefore, I've said to you guys, this would be what? This would be our selling price. Our selling price is how much? 30,444, right? 30,444. Then I said to you, you have to identify your cost, accumulated depreciation, and your selling price. So we are done identifying our selling price. Let's check out whether we have any information that tells us about the cost. Yes, we do have the information that tells us about the cost of the sold vehicle. They say the cost price of the sold vehicle is 180. So therefore, in my cost here, I'm just going to write my cost is 180. Then we are done covering the cost. So now we are going to focus on our accumulated depreciation. Do we have any accumulated depreciation? Therefore, it's a question mark. Then I said to you, whenever guys, it's a question mark here. Therefore, they have to give you the date of purchase of these assets. Therefore, here it's given, it's hot, it's 1 April 2014. Then I said to you, if you know the date, you have to know what again? You have to know the method that the entity used to depreciate the assets of the vehicle. Then you say the entity used the diminishing balance method at the rate of how much? At the rate of 20%, guys. So now we are going to calculate what our accumulated depreciation, right? So it's a what? It's a question mark. So we are looking forward now to calculate our depreciation. Remember, if an asset is bought on the 1st of April 2014, right? It was bought during the current financial year, right? During the current financial year of 2014 to 2015. Let's go to our financial. Here it's our financial. Let's take into consideration that this financial is the financial for 2014 to 2015, right? 2014 to 2015. I'm going to take it easy, guys. I'm going to take it easy with you guys, step by step, so that you can understand this, right? So now we are in a current financial year of 2014 to 2015, whereby this vehicle that was sold was bought, right? It was bought when? On the 1st of April, right? So here is my 1st of April, right? Here it's my 1st of April started, right? So my asset, it was not bought actually at the beginning of the year, but then it was bought on the 1st of April. So meaning it was not there on the 1st of March, right? But like then, immediately when we started a new a month of April, it was brought into use, right? So my assets, we will only, for the current financial of 2014 to 2015, we will only depreciate these assets from the 1st of April to February. How many months do we have there? We have April, May, June, July, August, September, October, November, December, January, February, right? How many months? It's 11 months. So these are assets that was sold during this current financial of 2014 to 2015. It will only depreciate, or it will only depreciate for a period of 11 months. I hope it makes sense, guys. It will only depreciate from for a period of 11 months. Remember, the asset, it only started to depreciate from the date it started to be used. So this asset, it was used actually on the 1st of April 2014, but it was not there on the 1st of March, meaning during the month of March. So it was bought during the current financial of 2014 to 2015, but on the 1st of April. So it was used on the 1st of April. So therefore it will start to depreciate from the 1st of April to February during this current financial of 2014. This is actually what I do to make my calculations more clear and easy. I say, okay, now I'm in the current financial of what? Of 2014 to 2015, right? So I'm going to calculate my depreciation for 2014 to 2015. What happened during this current financial of 2014 to 2015? That's whereby I bought my new vehicle. Remember, I said to you, even though we are required to use the diminishing balance method, but like then, when it comes to actually the current year that the asset was bought, is the same as us like applying the cost price method, because of like we cannot identify accumulated depreciation. For us to apply the diminishing balance method, because of like is the same as zero, because of like our assets that have not yet depreciated during that current financial year. It will only started to depreciate at the end of the year, meaning on the 28th of February. That's why we can say the assets have lost this value. Then in the next current financial of 2015 to 2016, that's where we can apply the diminishing balance method, because of now we have what? We have accumulated depreciation. I hope it makes sense. So now let's apply the diminishing balance method. But then remember, it was bought during the current financial of 2014 to 2015. It's the same as us applying cost price method, right? So our cost is going to be 180,000 subtract by 0, because of like we don't have any accumulated depreciation. Then our carrying value is equals to 180,000. Hence I'm saying it's the same as us applying cost price method. Then we are going to multiply by the rate. The rate is 20% according to the information. Then we have to apportion. What do you mean by saying we have to apportion? Whereby we apportion, it's whereby we only depreciate the assets from the date it was used, meaning for only the month it was used, right? So we will apportion these assets only for a period of 11 months, multiply by 11, as it was used only for 11 months during the current financial year of 2014 to 2015, right? Then what is my total there? I get my total as 33,300. You can press your calculator there and confirm the same amount. If it is not correct, remember we have principal marks here. You will get the principal marks for applying the principal. This is actually the principal. So therefore you will get your principal mark even though the amount is not correct. Very important, the very important part is only the principal not getting the correct amount, but then applying the information. So that's what I said to you guys. Remember, we have disposal and assets. The reason why like we have to go through to this long process, we don't know what, we don't know our accumulated depreciation. We don't know our accumulated depreciation, and it's needed when we have to or whereby we dispose of an assets. Remember, we have to identify what the cost, accumulated depreciation, and selling price. So now we are in a process of calculating our accumulated depreciation. Hence, we are going to this long process, right? Then very important information. Now we are moving all along to the current financial year of 2015 to 2016. So what I've said to you earlier before, I said the purpose of this session is to show students how to depreciate the assets from the date of purchase to the date of sale. This is actually what we are doing. So I need you guys like to participate. Like, guys, please participate into this one. It's very important one. It's very important one. The reason why we have to depreciate the assets from the date of purchase to the date of sale, it is because of like when we dispose of assets, we have to take out every single accounting entry of that asset that we're making from the date of purchase to the date of sale. We have to take it out of the business because of like we are no longer having that assets. I hope it makes sense. So very important, guys, information. Remember, we're still applying our diminishing balance method. Remember the diminishing balance method, it says cost subtract by what? By accumulated depreciation. So because of these assets, when it comes to the current financial of 2015 to 2016, it have been operating for a year now because of like it was brought into use during the current financial of 2014 to 2015. So whatever we are going to get, or the depreciation that we're going to get in the date of purchase or within the current financial year when the asset was bought, it's going to be our accumulated depreciation at the beginning during the current financial year of 2015 to 2016. I hope it makes sense. I don't want to confuse you. So let's talk about this 33,000. Let's talk about this 33,000. So this 33,000 here, it's going to be our current depreciation for the current financial of 2015 to 2015. Is going to be our current depreciation and also our accumulated depreciation at the end, guys. Why am I saying it's our depreciation and my accumulated depreciation at the end? It is because of like during this current financial year of 2014 to 2015, that's whereby the asset was bought, right? Like it have not yet depreciated. It does not have any accumulated depreciation at the beginning. So my accumulated depreciation at the beginning is going to be 0. Then for me to get my accumulated depreciation at the end, I have to take what? My accumulated depreciation at the beginning plus my current depreciation. So it's the same as saying 0 plus 33,000, right? So which will give me the very same amount as depreciation. Hence, I'm saying it's my accumulated, it's my depreciation, and again, it's my accumulated depreciation at the end during the current financial year of 2014 to 2015. The very same accumulated depreciation at the end. Listen very carefully. The very same accumulated depreciation at the end of 2014 to 2015, it will be accumulated depreciation at the beginning during this current financial of 2015 to 2016. All our previous depreciation, when it comes to this current financial year that we are in now, it will be regarded as accumulated depreciation at the beginning into this current financial year that we are in right about now, right? So if we continue applying our diminishing balance method, we are going to take our cost subtract by accumulated depreciation at the beginning, which is what? Which is our previous accumulated depreciation at the end, 33,000. Guys, please, this is very important part. This is very important part. Please make sure you listen attentively. So if I'm taking my 180,000 subtract by 33,000, I'm going to get a carrying value, and a carrying value of 147,000. According to my calculations. Press your calculator, correct? Press your calculator, guys, so that you can confirm my amount. But like I said before, you can, like, your calculation or your calculator can decide to disappoint you, but like that, or it may affect that, like, you have applied the principle. We are not going to mark the correct answer. We are going to give you guys a principle mark for applying the principle, right? So please just make sure, like, you know your principle. Is a very important thing. Make sure that you know your principle instead of you getting the correct amount of the correct answer. Apply your principle. Your calculator may disappoint you somehow. Then we are going to multiply it by the rate. The very same carrying value at the beginning. We multiply by the rate. Our rate is 20%. Then we apportion. For a mere fact that during the current financial of 2015 to 2016, it was used for the whole year. Then we are going to multiply it by 12 over 12. And now we are going to get what? We are going to get our current depreciation for the current financial of 2015 to 2016, which is how much? Which is 29,400 according to my calculations here. Is 29,400. This is what? This is my depreciation for the current financial of 2015 to 2016. Please, guys, don't confuse yourself. Right, so now I'm moving all along through to the current financial of 2016 to 2017. Right, remember, you have to depreciate from the date of purchase to the date of sold. So it was sold during the current financial of 2018 to 2019. So we're going to depreciate it up until the current financial of 2018 to 2019. Right, remember what I said to you guys. For me to get accumulated depreciation, let me just do this before I move to the current financial of 2016 to 2017. I want to show you guys step by step so that you guys can understand the principle. So for me to get my accumulated depreciation at the end for the current financial year of 2015 to 2016, I have to take my previous accumulated depreciation, or my accumulated depreciation at the beginning, which is 33,000 plus my current depreciation. It will give me what? It will give me my accumulated depreciation at the end for the current financial year of 2015 to 2016. Let's do the calculation so that you guys can understand this, right? It's going to be 33,000, which is my accumulated depreciation at the beginning, plus my current depreciation of 29,400. Let me just press my calculator here. Plus 29,400. Let me just add 29,400. It's equals to 62,400. This 62,400 is going to be what? My accumulated depreciation at the end for 2016, which is actually the current financial of 2015 to 2016. Please, guys, don't confuse yourself, right? Every same accumulated depreciation at the end during the current financial year of 2015 to 2016. When it comes to the current financial year of 2016 to 2017, it will be my accumulated depreciation at the beginning. It would be what? My accumulated depreciation at the beginning. The very same 62,400 that was accumulated depreciation at the end during the current financial of 2015 to 2016. When it comes to this current financial of 2016 to 2017, it would be my accumulated depreciation at the beginning, right? So let me just continue with my my diminishing balance method. Apply my diminishing balance method. It's what? It's 180. It's going to be 180. Please, guys, listen attentively. Pause the video if you have to. If I lost you somewhere somehow, guys, please pause the video. Please pause the video because of you will be more confused. So like I said, I'm still continuing with what? With my diminishing balance method, taking out the cost, subtract by accumulated depreciation. Specifically focusing on accumulated depreciation at the beginning. What I said to you earlier before is that, like, my accumulated depreciation of 2015 to 2019 of 62,400, it will be my accumulated depreciation at the beginning for the current financial year of 2016 to 2017. So let's apply the principle. I'm just going to say my 180,000, subtract my 62,400. Then how much will I get there? I think I'm going to come across 117,600. Let me just confirm that. 180 subtract by 62,400. Yes, I'm getting 117,600. This is actually my carrying value at the beginning. I supposed to multiply by the rate of 20% according to our information then. Then for the mere fact that within the current financial of 2016 to 2017 it was used for the whole year, then I have to multiply by 12 divided by 12. If I lose you somehow, guys, please pause the video or go back to the information for the first part whereby we are analyzing the information. Then how much do I come across here? I come across 23,520. Let me just prove that on 117. But then I said to you, your totals are not important, but the principle is very important, right? Your principle is very important, so that you can get your principal mark, right? So I'm going to get 23,522. What is this 23,520? This 23,520 is going to be my current depreciation for the current financial of 2016 to 2070. This is what? This is my current depreciation, guys. Let me just drop the information. This is what? This is my accumulated depreciation. Actually, my depreciation, 23,520 is what? Is my depreciation during the current financial of 2016 to 2017. So now we are looking forward to calculate what? To calculate the accumulated depreciation at the end during the current financial year of 2016 to 2017. What I said to you earlier before is that for you to get the accumulated depreciation at the end, you have to take your accumulated depreciation at the beginning, which is in this case is 62,400 plus your current depreciation of 23,520. It will give you what? It will give you, guys, your accumulated depreciation at the end. I know my voice is too sweet. Don't sleep there, guys. Follow the video. Accumulated depreciation. I'm not going to get this accumulated depreciation as full, as we don't have time. Accumulated depreciation at the end is what? It's formula. It's combination of accumulated depreciation at the beginning plus the current depreciation. What is our accumulated depreciation at the beginning within the current financial of 2016 to 2017? It's 62,400 plus your current depreciation. How much is our current depreciation? 23,520. Then how much do I come across there? Is my accumulated depreciation at the end is 62,400 plus 23,520. I come across my accumulated depreciation at the end as 85,920. That's my accumulated depreciation at the end within the current financial year of 2016 to 2017. Please, guys, principle is very important. Just make sure like you master how to do this thing. So now we are moving all along to the current financial year of 2017 to the financial year of 2018. So we are still continuing applying our diminution balance method or our carrying value method. Remember the formula is cost, which is in this case our cost is 180,000. Then we're supposed to subtract by our accumulated depreciation at the beginning. Remember what I said to you earlier before is that like your previous accumulated depreciation at the end, it will be your accumulated depreciation at the beginning in the current financial year that we're in. Meaning, in this case, my previous accumulated depreciation at the end, it was how much? 85,920. Can I just please fix this and put my 2017 in brackets so that you cannot be confused? So that you cannot be confused. You will think that it's 82,920, 2017. To bring confusion, let me just put it in brackets so that you guys can understand it. Okay, this is what? This is my accumulated depreciation at the end for the current financial of 2016 to 2017. Then when it comes to the current financial of 2017 to 2018, it will be accumulated depreciation at the beginning. So continuing with our diminution balance method For the current financial year of 2017 to 2018, I'm going to take my cost of 180,000 and subtract the accumulated depreciation at the beginning, which is our previous accumulated depreciation at the end. Then it will be recorded as accumulated depreciation at the beginning in the current financial year that we are in now. So it's 85,920. Then I will come across my carrying value at the beginning as how much? As 94,080. Let's just confirm that. But remember, the principle is more important than your total, because of your calculator may disappoint you during the exam, then you panic, students are going to train out when it comes to examination. But like then we will give you guys operational mark or principal mark, right? So I've confirmed it. This is my carrying value at the beginning during the current financial of 2017 to 2018. So I have to multiply this by rate and multiply by the month for the effect that within the current financial of 2017 to 2018, this asset was used for the whole year. Therefore, we have to multiply by 12 over 12. What are we going to get there? I'm going to get my depreciation as 18,816. 16. Let me just confirm that. It's 94,080. Multiply by 20%, multiply by 12 over 12. Yes, I get my depreciation as 18,816. What is this? This is my current depreciation for the current financial year of what? For the current financial year of 2018. Sorry, for 2028. For the current financial year of 2018. Very important, guys. So now we are going to calculate what? We are going to calculate our accumulated depreciation at the end for the current financial year of 2017 to 2018. What makes our accumulated depreciation at the end? As I said to you, our accumulated depreciation at the end, it's actually a combination. I said to you, it's actually a combination of accumulated depreciation in the beginning plus our current depreciation. What would be our accumulated depreciation at the beginning? Into this case, our accumulated depreciation at the beginning, it will be 85,920, 85,000. Let me just type here, 85,920 plus our current depreciation. What is our current depreciation within the current financial of 2017 to 2018? It is 18,816, like the way we have calculated it. Then if we add both of them, how much are we going to get? 85,920 plus 18,816. I come across the amount of 104. 736. You can confirm it, but like I said earlier before, the total is not important. We'll give you operational mark or principal mark for applying the correct formula. So now we are going to the current financial of 2018 to 2019, which is actually the current financial year that we are in right about now. This is actually the current financial year whereby our assets were sold, right? So please listen very carefully about this one, right? This is actually the current financial year that we're in, whereby the assets were sold, right? Remember, it says to you, the vehicle that was bought on the 1st of April 2014 was sold for 30,444 on the 30th July 2018 for cash. So now we have come to the current financial year whereby our assets were sold. Still applying the diminishing balance method, our cost is 180,000, subtract by our accumulated depreciation at the end, which happened to be our previous accumulated depreciation at the end, right? For the current financial of 2017 to 2018, it will now be what? It will now be our accumulated depreciation at the beginning, right? So it's how much? It's 104,736, right? Then I get my carrying value at the beginning as how much? 36. I get my accumulated depreciation as 75,264. This is what this is my carrying value at the beginning. Remember, we have to multiply by our rate, right? Then now is the problem whereby we have to apportion, whereby my student make mistakes, right? So please listen attentively. Let's go back to our information before we complete that part. Here it is. Here it is. It says this vehicle, it was sold when? On the 3rd of July 2018. Let's go back to our financial year here. Right? It was sold when? Immediately at the end of July. Right? What about here? So meaning we can all agree that from March to July, this asset was available. This asset was available from March to July. So okay, I'm sorry for that. I'm sorry for that. Let me just fix my financial year here. Okay, this is my financial year. It keep on repeating itself here. So I'm sorry for that. But then let's focus from here, right? Let's focus from here to here, right? Let us just take this into consideration. Let us just take that into consideration, right? Yeah, it's correct. Okay, then let's go back to our information. It says the vehicle that was bought on the 1st of April 2014 was sold for on the 3rd of July. Then I'm taking you back to our financial year, right? So if the assets was sold at the end of the month, so therefore it was used during that during that month. But again, if the asset it was sold at the beginning of that particular month, then it was not used for that particular month. So when it comes to the disposal here, whereby we have come to the current financial year whereby the assets were sold, we are only going to take into consideration the month the asset was used, right? The month the asset was used, or the month the asset was available into the business. So this asset, it was available for March, April, May, June, July. How many months? 1, 2, 3, 4, 5. It was only used for a period of 5 months during the current financial year of 2018 to 2019. So right about here, we have to apportion, meaning we have to take only increments. We have to take or depreciate our assets only for 5 months. Only for 5 months, guys. Then when I got there, I get 6,272. That's what I get here. I get my depreciation as 6,732. Let me just confirm it. It's 75,264 multiplied by 20%. Oh, multiplied by 5 over 12. Yes, I get to 6,272. This is what? This is our current depreciation for the current financial of 2019 for the asset that was sold. Let me just pass the information, right? So remember what you're looking for. We are looking for what? Accumulated depreciation. Accumulated depreciation, right? So my accumulated depreciation at the end is going to be what? It's going to be my accumulated depreciation at the beginning, which is 104,736 plus my current depreciation that we've just calculated here is 6,272. It will give me what? It will give me my accumulated depreciation at the end. Then it's 104,736 plus 6,272. Then I come across my accumulated depreciation at the end as 101 and 8. This is my accumulated depreciation at the end. So therefore, I've covered what? I have covered my accumulated depreciation. So before we can go any further, let us just continue filling in our ledgers here, right? Let us just fill in our ledgers here. Let us just fill in our ledgers here. So let's start firstly with this ledger account of vehicle. This section, I call it the cost price T account, right? Because of like here, it's only whereby we are taking into consideration what? The cost price. So this is an asset account. It increases where? It increases on the debit side. So meaning whenever we buy an asset, it will increase here on the debit side. Then whenever we sell an asset, it will decrease here on the credit side, right? So now we are going to have our balance. So now we're going to have our balance brought down. So our balance brought down here, it's actually our cost price at the beginning. So according to this information, our cost price at the beginning, it was 1,179,999. So here we are going to have additionals. So additionals here, we only take into consideration what? We only take into consideration the new assets that are bought during the current financial year that we are in now. Let's go back to our information here. It says additional vehicle, that's additional assets. Additional vehicle, it was bought on the 30th of September 2018, which is actually during our current financial year of 2018 and 2019, which is the year that we are currently in now, according to this book of the business. So yeah, additional, it's how much is cost price? It's 120,000. So here, like I said, whenever we buy an asset, it's going to increase on the debit side. Let me just write it there. It's a debit side. It have what? We have a positive side, right? Then now we are moving all along to the credit side. What I said to you, the credit side, that's where it increased. This an assets account. That's where my credit decreases. It decreases on the credit side, right? Then now here we have assets disposal. So what do we record here under asset disposal? We only record the cost price of the sold vehicle. According to this information, my cost price of the asset that was sold, it was 180,000, right? Then according to this information, we don't have any additional informations about the vehicles we sold, we bought, then we have taken that into consideration. Then now we can close off our ledgers. We're going to have our balance. Balance carried down. Carried down as how much? First of all, we have to close off our debit side. We have to close off our debit side. So if we take 1,179,999 plus 120,000, I come across the amount of 1,299,999. So remember, your debit side and your credit side, it is always equal, right? Then for me to get my balance carried down here, I have to take my 1,299,000, subtract my disposal of 180,000. So which is how much? I'm going to come across 1,190,999. That's my balance carried down. The very same balance carried down here. The very same balance carried down here. You have to show the effect on. You have to show the effect on your debit side after closing off your accounts here with the very same amount. This represents that whenever you're going to start the new financial year, we are going to have a balance brought down of 1,190,999. Right? Please don't forget that, guys. And please, but like then let me just not talk about it because of like it's not important for my grade 11 and grade 12. I will talk about it when I present or when I issue another video. Then now let's move all along to our another ledger account here. We have the depreciation, which is actually an expense account. So the expense account, the increases on the debit side, guys. The increase on the debit side. So whenever an asset depreciate, we are going to take the records on the debit side, and it decreases on the credit side, guys. So all of our depreciation account, they are debited with accumulated depreciation. Depreciation. So very important part, guys. Very important part about this part of the depreciation. So usually the depreciation, we are specifically focusing on the current depreciation, right? The current depreciation. We don't take into consideration all of the depreciation we've been calculating here. So the question, it says you are required to prepare the general entries for the current financial of 2018 to 2019. Therefore, we will only prepare ledgers for depreciation for only the depreciation that is in or that is within the current financial of 2018 to 2019. You don't have to take into consideration all of the depreciation here because of like they were actually recorded in that current financial year, right? So now we have to take only into consideration how much 6,272, which is our what? Our current depreciation. So because we're also having our additional vehicle here, we also have to show the effect here, right? Then I will come back to my depreciation account. Let me just like pass the information that I've recorded or that I've made the workings for the disposal and passed it here, right? So that you guys, I cannot confuse you. So now we have our accumulated depreciation here. We have our debit side. That's whereby it decreases, right? Then on the credit side here, that's where by our accumulated depreciation account, it increases. So very important part, guys. Whenever your account increases, that's whereby your opening balance it would be. Let's check this. What was our opening balance? Where was our opening balance for the vehicle? It was on the debit side. Why? Because of that's where it increases, right? But then very important part when it comes to the depreciation, like I said before to you earlier before, is that like the depreciation is only for a period of 12 months. Like the depreciation account is specifically focusing on the short term, while the vehicle account and accumulated depreciation account, they focus on the long term. Hence, the vehicle account, it have the balance at the beginning, and also our accumulated depreciation account, it will have it will have the balance brought down or opening balance. But then for the mere fact that the depreciation is only focusing on the current movement, it will not have opening balance or balance brought down. I hope it makes sense. So guys, we are going to have our accumulated depreciation here, our opening balance, which is balance brought down. I hope you guys are enjoying the content. We are still subscribing. So guys, let's talk about our accumulated depreciation at the beginning, right? So accumulated depreciation at the beginning, actually accumulated depreciation at the beginning for the whole assets. Let's check the information. It says during the current financial year of 2018 to 2019, we are having how many vehicles? We're having 3 vehicles into the business, right? Including the assets or the vehicle that was sold. It's included here when they say 3 vehicles, right? So our accumulated depreciation at the beginning, our opening balance of our accumulated depreciation at the beginning, it will be accumulated depreciation. It will be accumulated depreciation at the beginning for 3 vehicles, not only for 2 vehicles, for 3 vehicles, right? So we will take this accumulated depreciation that we've calculated here, whereby we've taken our cost, subtract our carrying value. This will be what? This will be our balance at the beginning for our account of accumulated depreciation. Then very important part when it comes to this part, guys. So I always advise my student to do this because of like whenever they combine here, like they just miss the certain information. So the following item that will fall under our accumulated depreciation account, it will be our depreciation, right? You can just write depreciation here and combine your new depreciation, your old depreciation, and the sold depreciation. But like then I always advise my student to do it like this because of like when they say depreciation, they sometimes like only take into consideration maybe let's say the sold and the old, then they forget the new or vice versa, right? So I always advise my student to do this. Depreciation, it will be depreciation for sold. They will mark you. They have to mark you. Then I'm going to have again the depreciation for old. Then you're going to have the depreciation for a new assets, right? Depreciation for a new asset, right? So whenever you are done calculating your depreciation of a sold, which is our disposal in short, you are going to put it there. Whenever you're done calculating your depreciation for old, you'll put it there. Whenever you're done calculating your depreciation for a new vehicle, you will put it there. So up to so far with our workings, we have calculated what? We have calculated depreciation for sold vehicle, which is how much? 6,272. Right? Then we are moving all along to our debit side. A very important part, like I said to you, as you can see, in our accumulated depreciation account, whenever an asset depreciates, we will continue with accumulated depreciation here. Like I said to you before, is that like accumulated depreciation, guys, it have opening balance. This opening balance here, according to this information, it is actually accumulated depreciation at the beginning for the 3 vehicles that we are having into the business, including the very same assets that was sold, right? The very same assets that was sold. Take that into consideration, right? So whenever the assets depreciate, our accumulated depreciation account is going to be affected. Actually, this is the summary of the depreciation of all the assets that we have into the business from the date it started to depreciate to the date it will be sold. So this is what happened when it comes to the disposal. This is the treatment into accumulated depreciation. I want you to understand this treatment. So what about here on our credit side? I'm going to explain it. We're going to have assets. Disposal. I'm sure many of you are asking yourself so many questions. Why do we have asset disposal on the credit side and also have the depreciation of it on the credit side? The reason being is that like whenever an asset it is used during the current financial year, whenever the asset it was used during the current financial year, whether it can be used only for 1 month, for 4 days, it will depreciate for that 4 days. our depreciation it will be affected. So therefore, we have to show the effect also into our accumulated depreciation account, because of it give you the summary. The accumulated depreciation account, it give you the summary of the depreciation from the date it started to be purchased to the date it will be sold. So it will be recorded here. So meaning, let's talk about this accumulated depreciation at the beginning. It's basically focusing on the disposed assets that was disposed of 108, right? So the accumulated depreciation at the beginning, according to this information, how much was it? It was 104, right? It was 104,736. It is included into this balance at the beginning, right? We can agree that the accumulated depreciation at the beginning of this sold vehicle of 104,736, it is included into this balance, opening balance of accumulated depreciation. Then we have taken up its current depreciation of 6,272, right? Meaning we can all agree that like the accumulated depreciation at the end of this sold vehicle, it's actually included into this credit side. So now we are selling out the assets. So whenever we sell out the asset, we have to take all of the things that we have been recording about this asset out of the book of the business. We've been recording, it have been increasing, our accumulated depreciation account, it have been increasing. So now when we are taking it out of the book of the business, remember, whereby we are selling assets, we have to take it out of the book of the business to show that we are no longer having these assets. Everything that we have been recording about these assets from the date it started to be brought into use, we have to take them out of the book of the business. How are we going to take that out of the book of the business? Basically focusing on accumulated depreciation. We will take here accumulated depreciation at the end of that assets. Reason being, it was recorded on the credit side. So for us to cancel it, we have to debit it. Positive plus negative, it will give you what? It will give you 0. Right? I hope it makes sense. Our accumulated depreciation at the beginning for this sold vehicle, it is included where? In 200,000. Then we have showed the depreciation of it for the method that it was used during the current financial year of 2018 to 2019. For how many months? For 5 months. So therefore, we have to show its depreciation. So all in all, we can say the accumulated depreciation at the end of these assets, the accumulated depreciation at the end of this disposed asset, it is actually included here, because of at the beginning it's included in 200,000, then the depreciation is recorded separate. So for us to cancel all of that into accumulated depreciation account, we have to debit it. That's the total, like as combination of combining what? Of combining accumulated depreciation at the beginning and the current depreciation. I hope it does make sense. Now we are doing what? We are canceling what we've been recording since from the date it was purchased. I hope it makes sense. If it doesn't make sense, you are more than welcome to go back to the video or comment. We will explain it more further. Here, guys, like I said, we are giving you more information. You've been treating these assets. You've been recording asset disposal without knowing the reason why are you supposed to record it. Then here we are going to have what? Our balance carried down. I'm sorry to bring it here. I was supposed to bring it here, but then it doesn't matter. The principle is the principle. It will remain the same, right? So now let's talk about this accumulated depreciation that we have recorded into this accumulated depreciation of sold assets that we have recorded into accumulated depreciation account. So let's talk about this asset disposal account that we have written here into accumulated depreciation. This accumulated depreciation account, it shows you that this accumulated depreciation, this disposal that we wrote here into accumulated depreciation account, it shows you that the very same amount here, you have to record it where? You have to record it into asset disposal account. Same applies to our vehicle account. It says like if it's asset disposal account here, it show you okay. Or when it comes to your asset disposal account, the very same amount that you record here, you have to record it where? You have to record it into your asset disposal account. If you have credited it into your vehicle account, then when it comes to its original account, you have to do what? You have to debit it. Double entry principle. You have to do what? If you have debited it here into the vehicle account, then when it comes to its original cost account, you have to do what? You have to debit it. What are we going to name it? We are going to name it the vehicle. Why? Because it comes from vehicle account. Same applies to our accumulated depreciation. If it shows you that this amount of 111,000 is supposed to record it where? Into asset disposal account, where? On the debit, on the credit side. Why? Because of like it was debited into accumulated depreciation account. So therefore, when it comes to its original account, it have to be what? It have to be credited. We apply what? A double entry principle. How are we going to record it here or name it? We are going to name it accumulated depreciation. We are going to name it accumulated depreciation. Why? Because it comes from accumulated depreciation account. You guys understand it? You have to ask yourself questions when you prepare ledger's account so that you guys can understand this, right? Same applies to depreciation here. As you can see, the depreciation, it's recorded as what? This accumulated depreciation account. This accumulated depreciation account, it tells you that the very same amount, it have to be recorded where? It have to be recorded into accumulated depreciation account, where? On the credit side. Why? Because of like it was debited into the depreciation account. So if you record it into accumulated depreciation account, you're going to record it what? As what? We are going to record it as the depreciation. Why? Because it comes from the depreciation account. I hope it does make sense, guys. So let's start first with the first one from vehicle. You're going to record it where? Remember, you're going to record it on the debit side. That's what? As vehicle, because it comes from where? It comes from vehicle account. As how much? As 180,000. You see how wonderful accounting is. Ask yourself questions. So guys, I'm not going to write the dates here. It's not necessary when it comes to grade 11 and grade 12. So then now we are moving along to accumulated depreciation. Accumulated depreciation. I'm not going to write it full. I don't have space here. So it's how much? It's 111,008. Very simple, guys. Very simple. So analyze your information, get used to these things, right? So our asset disposal account, we have vehicle, which actually represent the asset that was sold. We have accumulated depreciation. Then on this side, we have profit on sale of assets. If we have generated a profit, then on the credit side, you're going to have our selling price here, either as bank or debtors control account. If the asset was sold to the one of our debtor, then it will be our debtors control account, or the creditors control account if it will be if the assets were sold to one of our creditors. Like then, if it was sold to the bank, then we're going to indicate that okay, it was sold for cash, therefore it's going to be a bank, right? So here we are going to record our loss on sale of an asset and also our selling price. Then on the credit side, we only record the original cost of that asset that was sold and profit if we generated the profit from selling that asset, which is something that I'm going to go to with you right about now, right? Then now, because of like we have identified our SP here, we have identified our SP here. That's the very same amount that we're going to record it here. But as what? Let's go to our information. It says this vehicle was sold for cash, right? So we're going to write it as bank. But then if it was sold to one of the debtors, we were going to record the debtors control account. Or if it was sold to one of our creditors, we are going to say creditors control account. So for now, according to this activity, it is bank because of like it was sold for cash. With an amount of how much? With an amount of 13,444. As I'm saying, guys, it's very important. It's very important to highlight these three things: cost, accumulated depreciation, and SP. Whenever you have the disposal, you see how easy it becomes for you to identify your information. So very important information here. How do we identify whether we have generated the profit or loss? Very important information. We are going to have our carrying value here, right? Remember our carrying value, it's cost subtract by accumulated depreciation. What is my carrying, what is my cost according to this? It's 180,000. Then what is my accumulated depreciation at the end? It's 111,008. Then how much is my carrying value at the end? I'm getting an amount of 68,000. Sorry, 68,992, right? So meaning during the current financial year whereby my assets were sold on the 30th of July, it was worth 68,922. So meaning whenever I decide to sell these assets, I supposed to sell it with this amount, 62,992. But again, it's my choice with the person I'm selling my assets to. I can sell my asset with the high value than this one, or with the less value than this one. Then that's whereby my profit or loss will come, right? But again, on the 30th of July, if I was supposed to if I was supposed to, or I decided to sell my assets, I supposed to sell my assets with this amount, 62,992. Then for now, according to this information, we decided to sell it with how much? We decided to sell it with 30,444. Can you guys see that, like, we sold an asset with the less value than it worth? So if we sell an asset with the less value than it worth, therefore, we are going to make a loss. But if this asset was sold for 70,000, therefore, we sold it with the higher value than it worth. Therefore, it will be a profit. So into this case, the difference, it would be a loss because of, like, we sold it with the less value than it worth. I hope it does make sense, guys. Loss on sale of assets is going to be how much? 68,000. Where's my 6 here? 68,992 subtract by my selling price of 30,444. Then my loss is how much? Let's press my calculator here. 68,902 subtracted by 30,144. Then I come across the loss of 38,548. Press your calculator too. I may make mistake because of this is a long session I've been recording since from morning. So press your calculator too. But like then I said to you guys, like, your totals are not important because of your calculator may decide to disappoint you during examination, or you may get frustrated. You know exam, guys, exam. But then please make sure, like, you apply the principle. And please, guys, most of the students where they write an exam that include fixed assets, they skip this question. Guys, please don't do that. This is whereby we collect marks, guys. This is whereby we collect a lot of marks. Please don't skip this. Most of the students who decide to write this question, they don't finish to write. You know why? Because of this long process, like they fail to apply this long process. So the more you practice, the more you will get used to the application. So please, guys, practice so that you cannot waste any time whereby you are going to write your exam or any of your semester test or your term test. You get that, guys? So please practice to do all of this process so that you can be familiar with how to apply the information, right? So let me just write my loss on sale of assets. Also, lose my loss on sale of assets. My loss on sale of assets is always recorded on the credit side. Then my profit, it will be on the debit side, right? But like then also about the disposal. When it comes to this disposal, guys, please, we don't have any opening balance because the disposal is something that happened during the current financial year, right? Hence, we are not having what? We are not having opening balance. How much is my loss here? It's my 38,548. And one thing, guys, please, please, this is how, like this thing I've shown you, this is how you identify whether you have made a profit on sale of an assets or profit on sale of an assets. Some of the students, they just like check the bigger side, then balance. No, guys, no. Just show your marker that you know the principle, right? Show your marker that you know your principle. This is how we identify whether the entity generated profit on sale of the assets or loss on sale of the asset. Don't check the bigger side and balance and make it a balancing figure. That's not how we're doing it. Let's apply the principle, guys, please. So if you're going to add our accumulated depreciation there of 101 and 8, then added by our bank, our selling price of 30,444 plus our loss of 38,548. I'm getting my amount of 180,000, guys. You see, 180,000. So it does balance. So we are still on the same page or on a good track. So far so good, guys. So we are done taking the records of this sold vehicle. Then let me just address this part of loss on sale of an asset. So loss on sale of an asset, guys, it's an expense. So if you're required to prepare your statements of profit or loss, or in short, your income statement, you are going to record it under your operating expenses. You're going to record it under your operating expenses. Then if you're required to prepare maybe a ledger account, this loss on sale of an asset, you will have a loss on sale of an asset. Then you will record it on your debit side. Why? Because of it's an expense. On the expenses, the increase where the increase on the debit side. It will be loss of an sale of an asset is your heading. Then on your debit side, you'll say your disposal is 38,548. We will come there when you do your first year. We will come there because of now. When it comes to grade 11 and grade 12, these are the major ledger that we are focusing on. So let's focus on them only. So guys, can you see only with this information here, only with this information that we have done about the disposal or the workings of the sold vehicle, have managed at least to fill in some of the things there. So please, whenever you're done with the calculations and then you are required to prepare your ledgers, please just do your workings and paste the very same information you have calculated and place it into your ledgers account before you can move to any other workings. And I always advise my student to start with the workings of the sold vehicle because of like it's a lot, especially whereby you have to depreciate it from the date of purchase to the date of sold. So now we are going to calculate the depreciation for old assets or / vehicle. This is actually whereby most of the students make mistakes. Let me just highlight this. Please listen attentively, my fellow grade 11, my grade 12s. This is whereby most of the students make mistakes. Let's go back to our information. It says what? It says at the beginning of the year, right? How many vehicles do we have? 3 vehicles, including this sold vehicle, right? Including this sold vehicle, meaning my cost price here at the beginning, it include what? It include the cost of the sold vehicle. Same applies as my accumulated depreciation here of 200,000. It include what? It include the accumulated depreciation of a sold vehicle. So when it comes to the depreciation of an old assets or vehicle, we are only taking into consideration the assets that are left into the business, excluding the new asset that was bought. We are only taking into consideration the assets that we have in the business at the end of the year. We can all agree that we are no longer having this asset that was disposed, right? So we have to take out the cost of a sold vehicle from the cost at the beginning, and we also have to take out the accumulated depreciation at the beginning of a sold vehicle into this accumulated depreciation at the beginning of 200,000, right? So that we can know so that we can know the cost of what, so that we can know the cost of our remaining 3 vehicles. Actually, the cost and the accumulated depreciation of our remaining 2 vehicles, because one was sold. Very important information, guys. Very important information. So for this, can I repeat that? Basically, when you're focusing on the depreciation of an out, we are talking about the assets that we had from the beginning of the year to the day from the beginning of the year to the closing of our year, right? Not taking into consideration the additional assets, but the one that we're having at the beginning and also the end. We were having how many? 3 vehicles. But during the year, during the current financial year, or during our year, on the 3rd of July, we decided to sell what? To sell one of them, right? We decided to sell one of them. So now we'll be remaining with how many vehicles? We'll be remaining with 3 vehicles, excluding this new vehicle to transport. So we have to show in our cost price that we sold one of the vehicles. So whenever I'm going to take out the sold vehicle cost price, I'm going to be left with the cost price of how many? Of 2 vehicles. Same applies to accumulated depreciation. This is for 3 vehicles. I have to take out what? I have to take out the accumulated depreciation at the beginning of what? Of the sold vehicle, so that I can know my accumulated depreciation of the remaining 2 vehicles. I hope it does make sense. Please, guys, most of the students, they make mistakes when it comes to depreciation of an old asset. They just take like the cost price at the beginning as it is, which is incorrect, because of like it include what? Include the sold assets. I hope starting from today, you guys, you will avoid or refrain from making that mistakes. So my cost, it was how much? My cost, it was so my cost, it was 1,179,999. Then what was my cost price of a sold vehicle? My cost price of a sold vehicle is 180,000. So my cost price of the remaining vehicles, it will be how much? 999,999, whatever. Okay, so now we are going to look out for accumulated depreciation. Still at the beginning, it's how much? It's our accumulated depreciation at the beginning, which includes the sold vehicle. The amount, remember, it was 200,000. Then I'm going to subtract the accumulated depreciation of what? Of sold vehicles, specifically focusing on accumulated depreciation at the beginning. So how much was my accumulated depreciation at the beginning? Remember, let me just go back to my calculations. Remember, I said to you, when it comes to the current financial of 27 to 2018, then we're moving all along to the current financial of 2018 to 2019. The accumulated depreciation at the end of the current financial of 2017 to 2018, it will be the accumulated depreciation at the beginning for the current financial of 2018 to 2019. In short, this accumulated depreciation of 104,736, it will be what? It will be accumulated depreciation at the beginning for the current financial of 2018 to 2019. So this is what? This is our accumulated depreciation at the beginning for a sold vehicle. I hope it does make sense. So let me just continue with my calculations. It's 104, 736, 736. I'm going to get a total of how much? I'm going to get the total of 952. Actually 95,264. Let me just confirm that. It's my 200,000. Subtract 104,736. Then unfortunately, I'm also getting the very same amount, 95,274. Then now we can apply our diminishing balance method of saying our cost of 999,990, whatever. Then we're going to subtract it by what? By our accumulated depreciation of 95,264. Then how much is our value then? 910 subtracted by 95,264. Then I'm going to get my carrying value at the beginning as how much? As 904. So, sorry. 904, 735. Then I'm going to multiply by the rate. What was my rate? Still continue as 20%. Sorry. Yes, still continue as 20% over 100. Then multiply for the full 12 months because of this remaining 2 vehicles. They were used for how many months? They were used for the whole year within the current financial year of 2018 to 2019, right? I hope it makes sense. Then how much it will be my depreciation for old vehicle? It will be how much? I come across an amount of 180,947 here. Let me just confirm that. It's 904, which is our carrying value at the beginning, 735, multiplied by 20%, multiplied by 12 over 12. Yes, I'm still getting the very same amount, 180,947. This will be what? This will be my depreciation of an old asset. So immediately when we get the very same information here, guys, please let's pause it to our ledger account. Our accumulated depreciation for old, it would be how much? 180,947. Then moving all along to our depreciation. Remember, whenever we post into our accumulated depreciation account, it comes from the depreciation account first. Whenever we post everything that we record under our accumulated depreciation account, it comes from the depreciation account first, right? Then we're going to have, we're going to have accumulated depreciation here. It will be how much? The very same amount of 180,947. Then now we are moving all along to the depreciation of a new assets, the depreciation of a new assets here, right, guys? So let me just highlight this so that it can be clear enough. Yes, guys. So let's move all along with our information. Remember, the very same information is the very same information we've analyzed, guys. So yeah, it says a new vehicle was bought on the 30th of September 20.18 for 120%. Remember, the very same year this new asset was bought, it's actually the current financial year that we are in according to this book of the business, right? So I said to you, even though we are required to use the diminishing balance method, but then to depreciate an asset that was bought during the current financial year is the more like we are using the cost price, because of like this asset they have not yet depreciated, so therefore its accumulated depreciation is going to be 0. So it's the more as applying the cost price method during the current financial year it was bought, right? So this asset, it was bought here, right, on the 3rd of September. So we can all agree that this asset, it was not used for the whole month of September because of like immediately at the end of September, that's whereby it started to be bought. So we can say this assets will start to be used from the 1st of October to February. So remember, when it comes to the depreciation, we only depreciated an asset for the month it was used, right? So this one, it was used from October to February. So how many months this asset was used? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 years. I get 5. I don't know about you guys. I'm getting 5 months. Is it 120,000? Subtract by 0. We cannot write that because of it's not necessary. Then the rate is 20%. Then we have to apportion because of like it was used for only for 5 months within this current financial year, right? So what is my depreciation? Let's press our calculator, guys. I get 120,000 multiplied by 20%, then multiply by 5 over 12. I get my depreciation as 10,000 for this new vehicle. Right, guys? I get it as 10,000. Right, so the very same 10,000 I have to transfer it to my ledger account, right? So let's move all along to our depreciation account and take that into consideration. Let's accumulated depreciation. It was how much our depreciation for a new vehicle was 10,000, right? So the very same effect, we have to show them into what? Into our accumulated depreciation account as 10,000. Right, guys? So we are done with the calculations of the vehicle. I think after this one, we have to take a quick break, then we'll come back again. But then let us just close off our account first before we are going to break. Then let us just start first with the depreciation account, right? So my depreciation account, I'm going to take 6,272 plus 180,147 plus my 10,000 of a new assets. I get my total as 197 to 119. In short, 197,216. Right? So guys, very important here. Like I said earlier before, you don't have any closing balance, you don't have any opening balance when it comes to the depreciation, because of opening accounts, they only like, okay, yes, for something that is used for a whole, that is used for more than a period of 12 months, because of like the depreciation part, guys. The depreciation part is actually focusing within the period of 12 months, while vehicle account and accumulated depreciation account, they are actually focusing on, or they are based on more than the period of 12 months. Hence, we have the opening balance. Hence, we have our closing balance, right? So now let's move all along to our accumulated depreciation account. Let's close off our accumulated depreciation account. We are going to take 200,000 plus our depreciation of 6,272 plus 180,000 plus 10,000. I come across my total is 397,290. I don't know about you guys, but like I said to you, what is important is principle, not to get the correct answer, right? This calculated, they are so disappointed. They will disappoint you. So don't look out for the correct answer, but rather apply the principle. Then for me to get my balance carried down here, I'm supposed to take this balance here, 397,219, subtract my asset disposal of 111 and 8 for me to get what? To get my balance carried down. So let's press our calculators. I'm getting an amount of 296,201. Then I'm done. But remember, the very same thing that we have recorded here, guys, you have to show it here, right? You have to show it here, guys. My balance carried down. What does this represent here? This represents that whenever we're going to come to the next financial year of 2019 to 2020, this will be my opening balance for accumulated depreciation account 286,211. Then we are done with the calculations of vehicle. So guys, if you don't understand anything, you are more than welcome to comment in our box, on our chat box there. Then will definitely help you or answer your questions, or you can just pause the video and go back again, guys. So we are done with the calculations of a vehicle. So now you are moving all along to the equipment, right? We'll take a short break, guys, don't worry. But like then let us just finish off this activity, this long activity. I hope you're still on the same page, guys. I hope you're still enjoying the video, even though it's a long one, I know, but then it's very beneficial to you guys. So like I said earlier before, guys, this is actually the information of equipment, the very same information the very same information I've analyzed before. It comes from this activity world here, right? That's the very same information, guys. So please don't confuse yourself, because of it is the very same information. Like I've just separated the information. So into this part, we are going to focus on accumulated depreciation, the cost price, and our assets disposal here, right? So here into asset disposal, guys, I've shown you everything about the asset disposal, everything that you have to take into consideration about the asset disposal. But like that, we cannot have a profit on sale of an assets and loss on sale of an assets. I just give you the format, right? But like then our calculations, it will guide us, or it will give us more information whether we generated profit or loss. Remember, according to the depreciation account, it was not required that. So under my equipment here, I didn't show any depreciation account, right? I didn't show any depreciation account, but then I hope from the vehicle here, guys, you have learned how to prepare the depreciation account, right? So we are still together. Now we are sticking to the required, right? Because of the time is not on our side. So guys, continuing with the information, like I said before, I've just like copied the information and pass it here. So it's the very same information, right? So let's continue with the information. See, the cost price at the beginning, it's 500,000, while our accumulated depreciation at the beginning, it's 80,000. Then let's check equipment information or any additional information about equipment. They said the entity used the diminishing balance method to calculate depreciation for their equipment with a rate of 10%. Very important information to take note of. As you can see, I've highlighted it. Then we have additional information. Like I said to you guys, when you're talking about additional information, we're talking about the current movement within the current financial year that we are in, right? So additional equipment, they say on the 1st of June 2018, the entity bought a new equipment with a historical cost of 50,000. Don't be confused about the historical cost. The historical cost is the same as your cost price, guys, right? So for the mere fact that, like, we know when, like I've showed you into my vehicle here, right? Like our financial year start from when? It start from March. It start from March to February. Let me just copy and paste the very same information here, right? Let me just copy and paste it, but let us just remove this 2014 because of like it was an example what we're dealing with. Let's just make it 2019, the current financial year that we are in right about now. Okay, guys, here are my workings. I'm going to write my workings here, right? Oh, I will try to make my letters look a little bit bold, right? Okay, let's continue with the information. You have additional equipment that was bought, right? That was bought. But then my advice to you guys is to start with the disposal information, because it requires what? It requires a lot of calculations and a lot of accounting entries. And some say you guys will start with the disposal part, especially if you have to depreciate it from the date of purchase to the date of sold. Let's go straight to the information of the disposal. We'll come back to the additional. Don't worry, guys, it's very short calculations. Let us just start firstly with the long calculations. I'm giving you guys a good exam technique. Start with the long question first so that you can avoid making the mistakes, right? One of the equipment that was bought on the 1st of March 2015 was sold on the 31st of October. Remember, I said whenever you see the disposal here, you have to make sure that like you have what? You have your cost. Let me just say the workings for disposal here, so that I cannot confuse you guys. Workings of disposal. Okay, working of the disposal, right? I said what is needed first is the cost price. The cost price, and what we are going to need accumulated depreciation here, and what we are going to need again our selling price. These are the major things that we should take into consideration when we are required to prepare asset disposal account or whenever we have any information about the disposal rights. So I'm going to go to the question now. One of the equipment that was bought on the 1st of March was sold on the 31st with the selling price of 102.0614 for cash. So therefore, I can write my selling price here because of like they have clarified it here, right? 102.061. They have the same information, guys. You can post it into your ledger's account. Can post it into your ledger's account. Where's my disposal? My disposal, right? What? When did we dispose these assets for cash or on credit, or we sold it to our debtors? According to the information, we sold these assets for cash. So under our asset disposal, we're going to write what? We are going to write our selling price here, but then we're going to name it what? A bank. How much it was it? How much was it? I wish I was having someone to call the amount for me here. 102. Let me just copy that information. Okay, guys, let us just paste the very same information into our ledger to save time. That's a good exam technique, right? So continuing with our information, we're still in a long process to go, right? So guys, they've given us the cost here, right? It's 150,000. The very same information, you can just go to our equipment account and paste it, right? Or paste it. So what's my equipment account? Here is it. Right? Remember, it's in an asset account. It increases where? It increases on the debit side, then it decreases on the credit side. Whenever it's going to increase on the debit side, it's whereby we buy an asset. Then whenever it's going to decrease on the credit side, it's whereby we are going to sell an asset. Hence, I'm writing my 150,000 of the disposed, which is the cost price of the disposed assets on the credit side. Guys, I hope it does make sense. Then here the main issue comes again, accumulated depreciation. How to? I told you guys earlier before. I'm sorry for this. Let me just do this. Okay, sorry for that. Okay, I said to you, whenever our accumulated depreciation here is a question mark, therefore we have to calculate it. But before we are going to calculate it, we have to identify what? We have to know when was the assets bought, and also the recommended method that the entity depreciate their assets on. Then we are told that the equipment is actually depreciated according to the diminution balance method with the rate of 10%. So therefore we can calculate what? We can calculate our accumulated depreciation, right? Then let's start first by identifying the current financial year that our assets was bought, right? It was bought when? On the 1st of March. right? So on the 1st of March, remember, it's actually the first month of our financial year, like the opening month of our financial year, right? So meaning during the current financial year of 2050, sorry, 2050 to 2060, these assets was used for the whole 12 months or for the whole year. Why? Because it was bought exactly on the same month we started our financial year, right? So now we are going to apply what? We are going to apply our diminishing balance method. Remember what diminishing balance method? It's cost price subtract by our accumulated depreciation. Parting to this part is the same as applying our cost price method. Reason being, it's actually the month whereby we bought the assets. So therefore, the assets have not yet depreciated. Will depreciate when? At the end of the financial year, guys. So I hope it does make sense. So this asset will only start to depreciate when? It will start to have the accumulated depreciation in the next financial year, right? So let's multiply by the rate. What is the recommended rate? Is 10%. Then multiply for the whole by the whole 12 months, because of like this asset was used for the whole 12 months for the current financial of 2015 to 2016, guys. I hope you guys are still following. Are you guys aware, like whatever I'm saying now, it's a repetition of what I've said earlier before. So I'm doing this so that you guys can understand the application, right? I'm doing this so that you guys can understand the application, right? So this will be what? This will be my 15,000. I get my 15,000 if I take my cost, subtract by the percentage, multiply by the month the asset was used. Then what I'm going to get, that's my depreciation of 15,000. This is my depreciation for the current financial year of what? For the current financial year of 2060. Then the very same depreciation, it will be what? It will be my accumulated depreciation at the end for what? For the current financial year of 2016. Reason why I say accumulated depreciation at the end. Remember the formula for accumulated depreciation at the end is what? It's accumulated depreciation at the beginning plus the current depreciation. So for the mere fact that this asset was brought into use within this current financial of 2015 to 2016, it has no accumulated depreciation at the beginning because of it have not yet depreciated. So my accumulated depreciation at the end, it is equals to my depreciation is the same as my depreciation, right? So let me just like do the long way method so that like you guys cannot forget this. Today, I'm very patient enough. I'm patient to go through to everything, right? So now the very same 15,000, right, is the accumulated depreciation at the end, like I said, right? So now I'm moving all along to the current financial year of 2016 to 2017, right, guys? So we are still applying what? We are still applying our diminishing balance method, whereby we're taking our cost, subtract by what? Subtract by our accumulated depreciation at the beginning. Remember what I said earlier before to you guys, say that whenever you're going to get here within this current financial of 2015 to 2016 as your accumulated depreciation at the end, it will be accumulated depreciation at the beginning within the current financial of 2016 to 2017, guys. So we can all agree that 15,000, it's going to be what? It's going to be our accumulated depreciation at the beginning within the current financial of 2016 to 2017. But I'm getting here as part of my calculations. I'm getting my calculations here as 105,000 as my carrying value at the beginning. Then remember, we have to multiply by the rate of 10%, then multiply by the full 12 months because of like this asset. It was used for the whole 12 months within the current financial of 2016 to 2017. Then what is my total here? I get my total as 13,500. Let me just prove that. 135 multiply by 10%, multiply by 12 over 12. Definitely I get my depreciation. My depreciation is 13,500, guys. So for us to identify accumulated depreciation at the end for these assets, you have to do what? You have to add your accumulated depreciation at the beginning, which is in this case is 15,000. I add it with what? I add it with my current depreciation of 13,500. It will give me what? It will give me my accumulated depreciation at the end for the current financial of 2016 to 2017. So 15,000 plus 13,500 will give me how the amount of how much? It gave me 28,500. This it will be what? This it will be regarded as my accumulated depreciation at the end within the current financial of 2016 to 2017. The very same accumulated depreciation at the end of 2017, it will be regarded as accumulated depreciation at the beginning within the current financial of 2017 to 2018, guys, right? Remember that. So if I commence or I still continue with my calculations here, my cost price, if I continue with applying my diminishing balance method, I'm going to take my cost price of 150,000, then subtract it by my accumulated depreciation at the beginning, which is actually my previous accumulated depreciation at the end for the current financial of 2016 to 2017, which happened to be accumulated depreciation at the beginning for the current financial of 2017 to 2018. I hope you guys are still following. I'm going to move very fast because I'm running out of time. So any questions, some clarity that you need, you will just comment there on the comment box, right? So now I'm going to calculate what my carrying value at the beginning for the current financial of 2017 to 2080. Whereby I'm going to take 150,000, subtract my accumulated depreciation at the beginning. How much am I getting here? I'm getting 121,500. Then I'm supposed to multiply it by the rate of 10%, divide by 100, then multiply it by the full 12 months, guys. Then I'm going to get my current depreciation of 2017 to 2018 as how much? I'm going to get it as 12,150,000. This is what? This is my depreciation, guys, for 2018, for the current financial of 2017 to 2018, guys. Then remember, for me to get the accumulated depreciation at the end for the current financial year of 2017 to 2018, I have to add what? I have to add my accumulated depreciation at the beginning. How much is my accumulated depreciation at the beginning? It's 28,500. That's my current depreciation. How much is my current depreciation here? It's 12,150, guys. Sorry, I made a mistake here. I forget to add what. So let me just fix the mistake here. It's 121,000. Then 500. I'm sorry for that. Typing error. Then let me just continue with this one. My accumulated depreciation at the end. My accumulated depreciation at the end is going to be my accumulated depreciation at the beginning. Okay, let me just fix this. I'm sorry for that. Okay, guys, please bear with me. Okay, here I get my depreciation, right? I get my depreciation. That's how much. Let me just press my calculator, correct what? It's my carrying value at the beginning, which is how much? 121,500 multiplied by the rate of 10%. Then I get 12,000. What am I saying? 121,000. I like money, guys. Sorry. I like money. So my depreciation, it will be how much? 12,000, not 121,000, because of 121,000 it was my carrying value, guys. I'm sorry for that. Then let's correct also this one. It's gonna be 12,150. Like I said, you see, guys, my calculator decided to disappoint me, right? But then for the mere fact that you have applied the principle, you're going to get operational mark, right? So I also qualified to get operational mark for that mistake, right? So this would be what? This would be my accumulated depreciation at the end. I don't know why my PC decided to highlight it. That simply means that it's very important. Yeah? So now we are moving all along to the current financial year of 2018 to 2019, right? Guys, very important. Now we are in the current financial year, whereby we dispose our assets, right? So now when it comes to this current financial year, whereby we dispose our assets, we are still continuing with what? We are still continuing applying the diminishing balance method, guys. We are still continuing applying what? The diminishing balance method. What is our accumulated depreciation at the beginning? Our accumulated depreciation at the beginning, it will be our previous accumulated depreciation at the end, which is 40,650. That's my accumulated depreciation at the beginning for the current financial of 2018 to 2019. Then it will give me what? It will give me my carrying value at the beginning, which is 109,250 according to my calculations. Let me just put that 150,000. 150,000 subtract by 40,650. I get what? I get exactly the very same amount, 109,250. Then multiply by the rate of 10% over 100. Then now, because of like it was exactly, we are in exactly the current financial year whereby the assets were sold, then we have to depreciate only, we have to depreciate the assets only for the month the asset was used. Remember, this asset was sold on the 31st of October 2019. So if you go to our financial year, this asset, it was used from March to October. So how many months the asset was used within the current financial year of 2018 to 2019? It was used for March, April, May, June, July, August, September, and October. How many months? 1, 2, 3, 4, 5, 6, 7, 8. It was used for a period of how many months? It was used for a period of 8 months. So we have to apportion here. We have to apportion, multiply by the rate of 10%, then multiply by 8 over 12, guys. 8 divided by 12, how much am I getting? I get 7,290 according to my calculations. But then let me just put that. I carrying value at the beginning, it's how much? 109,250. Multiply by the rate of 10%, multiply by 8 over 12. I get a very same exact amount. So this amount, this 7,290, it will be what? It will be my depreciation. Right? So now I'm looking forward to calculate what? To calculate my accumulated depreciation at the end. At the end, which is going to be how much? It's going to be 40,650, which is our accumulated depreciation at the beginning. We add it by our current depreciation, which is 7,290, which will give us how much? It will give us 40,650 plus 7,290. I come across an amount of 47,940, right? Yes, it is correct, right? So now we have identified what? We have identified our accumulated depreciation at the end, right? Like I said earlier to you guys before, whenever you get any information that we can pass it into your ledgers account, please do so to avoid the confusion, right, guys? So now, like I said, I didn't prepare any depreciation account because of like it was not required. But I did because of I've calculated my depreciation for the sold vehicle, for the sold vehicle as 7,290. Then I can pass it where? Into my accumulated depreciation account under depreciation of sold. I'm going to have 7,290, right, guys? Then remember I said earlier before to you guys, this asset disposal here, it represents what? It represents accumulated depreciation at the end for the sold vehicle. So what is my accumulated depreciation at the end for the sold vehicle? Is 47,940. I told you the reason why are we supposed to credit it into our accumulated depreciation. If you didn't hear the reason, you can just go back to our video and hear the reason why we take into consideration or we record the accumulated depreciation at the end for the sold vehicle. So let's move all along to our accumulated depreciation account. We are going to have our asset disposal as how much? As 47,950, 47,950, 940, sorry, 940. I told you I like money. 940, right? Then, like I said to you before, this asset disposal account, it represents what? It represents that the very same amount it have to be recorded where? Into asset disposal account as what? As accumulated depreciation into accumulated depreciation account to represent that this amount, it comes from accumulated depreciation account, right, guys? So the very same amount of 47,940, it will be also recorded into our assets disposal account, right? The one thing that I forget here, I said to you, once you record your equipment here, once you take into consideration the equipment and the disposal here, this disposal, it also reflects that the very same amount it have to be recorded with into your disposal account there on the debit side to apply the double entry principle. Whenever you're going to credit into country account, you're going to debit. So you're going to have an equipment here and our asset disposal account is 150,000, guys. Then up to so far, we are done taking into consideration the information of a sold vehicle. So now, one thing that we can do here is to identify whether we have generated the profit or loss. How do we identify whether we have generated the profit or loss? We identify it by firstly taking into consideration our carrying value. Remember, our carrying value, its cost, into this case, our cost is 150,000. We subtract it by how much? We subtract it by our accumulated depreciation at the end, which is 47,940. Then how much is our carrying value according to the information? Our calculation is 150,000 subtracted by 47,940. Then I come across my carrying value as 10,000 to 102,000. Sorry, 102,000. 102,060. That's my carrying value. Then I'm going to compare it with what? I'm going to compare it with my selling price of how much? My selling price here, it's how much, guys? Let me just write it down. My selling price here, it's how much? Yeah, record it here, right? It's 102,061. You see what I did here? You see what I did here? Let's check whether the guys you see what I did here. So the carrying value is how much? The carrying value is 102,060. Meaning we are, whenever like we decide to dispose these assets on the 3rd of October, we're supposed to dispose this asset with the value of 102,060. So if we dispose it with the value of 102,060, then we are not going to generate any profit or loss because of like we have sold it with exactly with what it was, right? So in case whereby our selling price is going to be more than this price, therefore the difference is going to be calculated as profit. In case whereby our selling price is going to be less than this amount, then our difference, it will be regarded as loss. So let's check according to the selling price. So this asset on the 30, when was it sold? Yes, on the 31st of October, it was worth 102,060. Then we decided to sell it with 102061, guys. So we can all agree that this amount of carrying value of 102060 is actually less than our selling price. So therefore we sold it with the higher value than it worth, right? So the difference, it will be what? It will be profit on sale of assets. So let's check the difference. If you're going to take the difference of 102061, then we subtract it by 102060, I come across my profit as 1 rand, guys. You see what I did into this question? Guys, please, guys, I want you to understand the principle. I want you to understand the principle. Are you guys aware that we have generated, we've made the profit of 1 rand? You cannot throw this 1 rand away, guys, because of it's a less rate. Even though we generated a profit of 50 cents or 20 cents, we have to show that profit into our accounting record to show that we have made the profit of 1 rand. Even though it's a less amount, you have to show it into your book of the business, or otherwise when the auditors are going to audit your financial statement, you're going to get the disclaimer report. They will not give you their audit opinion because of you do not follow the principle. So please, even though you can be a qualified chartered accountant or an auditor, guys, even though you come across these things into the business, you take into consideration what you get according to calculation. You take it into consideration, no matter how less it is. You take it into consideration, show the effect into your accounting entries, right? So because of you have made the profit now, let's delete this loss on sale of an asset, right? So let's check whether our account balance 47,000. Let me just balance credit side first, right? It's 47,940, 47,940,000 plus our bank of 102061. I get 151. Obvious. To the debit side is the very same amount. Please, guys, no matter it's 1, no matter it's 50 cents this profit, even though it's a loss, you record it. Whether it's 20 cents, whether it's 50 cents, whether it's 1 rand, it doesn't matter. Show the effect. Do your job as chartered accountant, do your job as an auditor, or otherwise, it will not be nice when the auditor comes there. You'll get a disclaimer report. So let's comply with the principle. So you see how wonderful EDU-GURUS questions are. We teach you in advance. We make you aware that the principle, they are applicable anywhere. Principle is applicable anywhere. The principle, it's not just by the amount. No, we don't care about the amount. What is important is the principle. Whatever amount that we're going to get by applying our principle is the very same amount that will record, right? So now we are going to move on to the depreciation of an old asset or equipment, because of now we are dealing specifically with what? Equipment, guys. Okay, let me just highlight the very same information. I'm sorry for my spelling error, guys. What is important is the application. Applying the principle. They're not going to mark your spelling here. So let's focus on that. On the principle, I wish I can take a short break, but I'm at work. Let's just continue with the information. So guys, remember right about here on top here, we're given what? We're given the cost at the beginning on our accumulated depreciation at the beginning. Without going any further, let's just post the very same information where into our ledger's account. My bad, I didn't post that. So it's 500,000. Then my accumulated depreciation is how much? It's 80,000, guys. It's 80,000. Right. So now remember what I said to you earlier before. I said this amount that you're going to get here, they're actually an amount at the beginning of the year. Remember, this asset, it was sold, the asset that was disposed of, the equipment that was sold, it was disposed when? During the current financial year. It was not disposed exactly when by we started our current financial year. So therefore, the cost and accumulated depreciation of these assets, it is included into this to cost, meaning the cost price of 150,000, it is included into 500,000, right? And also the accumulated depreciation at the beginning of the sold vehicle, let's check it. It was how much? It was 40,666 for 40,650, right? It was 40,650. This 40,650 is included here. So what do we mean, or what our calculation of depreciation? What is our depreciation of an old equipment? The depreciation of an old equipment is specifically focusing on the assets that we had at the opening of our business until the end of our business, until the end of closing of our business, right? So guys, so it's very important for you to take out the cost of the sold vehicle into this cost of 500,000. Same applies to accumulated depreciation. Why? Because of they were disposed during the current financial year. Because when it comes to this depreciation of an old vehicle, we're only focusing on the assets that we had at the beginning and they are still there at the end. This one, the dispose, it was there only at the beginning, but then at the end, it was not there because of it was sold during the current financial year. Hence, we have to take the cost of it out of this cost at the beginning. Same applies to its accumulated depreciation. So now let's do our calculations, right? Most of the students, they make mistake about that thing. They forget to take out the cost price of, they forget to take out the cost price of the sold vehicle. If I was a marker, it was not going to be nice. I was going to penalize you guys because of you didn't apply the principle. I was going to penalize you guys. So please, to avoid being penalized, please make sure that you apply the principle in a correct way. 500,000 subtracted by 150,000. What is my cost there? I get my cost is 350,000 for what? For the remaining assets, not taking into consideration the sold part, right? So now I'm going to move all along to my accumulated depreciation, right? My accumulated depreciation at the beginning was how much? 80,000, right? I'm going to subtract what? I'm going to subtract the accumulated depreciation at the beginning of the sold vehicle, which was how much? It was 40,650, guys. It was 40,650. So let's commence with our calculations here. What's happening now? Okay. Accumulated depreciation. Don't want to be edited. So let me just remove it. So my accumulated depreciation at the beginning was how much? 40,000. I'll just write it here, guys. 40,650. So I'm going to subtract it from how much? From 80,000. Then I come across my accumulated depreciation at the beginning, excluding the sold one, as 39,350. Guys, I hope you're still on the same page. This is a long session, I know, but then keep on taking the break, guys, so that you can flow with us. So now I'm going to apply what? Now I'm going to apply my diminishing balance method, because of now I have my exact cost price and my exact accumulated depreciation of the remaining assets without taking into consideration the sold part, right? So my cost is going to be 250 subtract by 39,350. Then I come across my carrying value as how much? I come across my carrying value as, let me just press my calculator. I think it's 250 minus 39,350. I come across my carrying value as 210,650. Sorry, 650. Then multiply by the recommended rate of 10% over 100. Then multiply by 12 over 12. Then I'm going to get my current depreciation as how much? Sorry, is 31,065. 31,065. This is my depreciation for old equipment. So let's just write it into our depreciation, into our accumulated depreciation as what? As 31,065. Right? So now let's move all along to the calculations of the depreciation of new assets. Right, guys? The depreciation of a new asset. So, as we've already calculated our depreciation of an old asset, I hope you guys do understood the process that we have to take for us to calculate the depreciation of an old asset. So now we are moving all along to the depreciation of a new asset, right? So let's go straight to the depreciation of a new equipment that was bought. Right, remember we still have our information here, which is actually the very same information that we have analyzed, right? Then let's go to the additional information of equipment. What does the information say? It says on the 1st of June 2018, the entity bought a new equipment with a historical cost of 50,000. Like I said to you guys there before, the historical cost is the same as cost price, right? So don't be afraid or be frustrated about the information. Historical cost is the same as your cost price, right? So like I said to you earlier before, guys, if the asset is bought actually during the current financial year that we are in, then we are required to use what? We're required to use the diminishing balance method. So during that current financial year, the asset was bought is the same as us applying the cost price method, because of the assets it have not yet depreciated, right? It have not yet depreciated. It is actually a brand new asset. So during the current financial year that we are in, then it was bought during the current financial year, then we are not going to have accumulated depreciation, because of like the assets it have not yet depreciated, right? So what I'm just going to do, we are just going to depreciate these assets from the 1st of June to the end of our financial year 28 February 20.19, right, guys? We cannot like depreciate these assets from the 1st of March, which is actually the beginning of our financial year, because of like these assets it was not there on the 1st of March, April, May. It started to be brought into use, or it started to be brought into the business on the 1st of June 20.18. So it was start to depreciate from there. So let's calculate how many months do we have from the 1st 1st of June until 28 February 20.19 June, July, August, September, October, November, December, January, February. So it's approximately close to how many months? Let's count. It's approximately close to 9 months. It's how much? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, it's 9 months, right? So remember, I said to you, you have to take into consideration what? Your cost price of 50,000. Then multiply by the recommended percentage or the rate, which is actually, into this case, our rate is 10% divided by 100. Then multiply by the month we have to apportion here. Then we are going to come across the total of how much? 3,750 according to my calculation. Let me just prove that. It's going to be 50,000 multiplied by 10%. Then multiply by 9 over 12. I come across an amount of 3,750. We can just prove that according to calculation. But remember what I said earlier before to you guys is that what is very important here, it's you applying the principle. Your calculation or your total, it will not be taken into consideration because of like you were qualified to get a principal mark just to apply the correct format or the correct principle, guys. So now you have to put the very same information into our alleges account, right? So whenever we calculate the depreciation, guys, the depreciation account, it will be affected. Then the country account of that particular depreciation, it will be accumulated depreciation. So under the depreciation here, we will have an amount of how much? 3,750 as our new depreciation, right? 2,750, right? Then remember what I said to you earlier before I said to you guys, you have equipment there, which is actually the summary of all the cost price of the assets, right? So remember I said to you, this is an assets account. It increases where? It increases on the debit side and decreases on the credit side. What I said earlier before to you guys about this additional, I said this additional, it represents actually the assets that were bought during the current financial year. So according to the information that we're given here, remember we bought an asset on the 1st of June 2018, which is actually during the current financial year that we are supposed to prepare our financial statements on. So under our addition day, we are going to have what? We are going to have the original or historical cost of that asset, which is 50,000. Right, so from there was no any additional information about the equipment, right? Therefore we can close off all our necessary account that we have prepared there. Let us just close off our account. Let us just start with our accumulated depreciation account, then moving all along to the cost account. Then we are done with asset disposal account. Then from there, we will be moving to additional questions. For now, let us just grab our calculators and do all the necessary calculations. So let me just look out for the total of accumulated depreciation account. I have 80,000 plus 31,065, then plus by 7,290. Then I'm going to add again 3,750. Then I'm going to get my total as how much? Get my total as 122,105. The very same total will bring it here into my debit side because of all of my ledgers account. They have to balance, guys. They have to balance. 105. Then for me to get my balance carried down, I have to take this total, subtract by asset disposal, right? So 122,105 subtract by my total, subtract my asset disposal of 47,940. Then how much I get here? I get the total or my balance carried down as 7,000, not 7,000, 74,165. That's my total space bar. Then that's my total. Remember what I said to you earlier before? I said like this accumulated depreciation account, it's actually the summary of all the depreciation from the day of purchase then to the date of sold, like each and every movement of depreciation, it will be summarized under our accumulated depreciation account. So therefore, in short, I can say accumulated depreciation account is a continuous account. Therefore, the very same amount of balance carried down, it will be regarded as an opening balance in the next financial year of 2019 to 2020, right? So we have to show the effect here into our accumulated depreciation account of 2019, right? We are going to say balance brought down with the very same total amount, right, of 74,165. Then you're done with our accumulated depreciation account. Then let's move on along to our cost account, right? So if I may check here, I have to balance first my debit side, right? So if I take my debit side, I'm going to come across the total of 550,000. 550,000, then the very same total I have to put it here. The very same total I have to put it here, 550,000. Then I'm going to take my 550,000, subtract by the disposal to get my balance carried down, which is in short my closing balance. So I get my closing balance as 400,000. As 400,000, guys. It's 400,000, right? Then remember I said to you earlier before, this is actually a summary of the cost of the assets that we have into the business, right? So this is actually a continuous account too, right? So whenever we are going to have our closing balance here on the credit side, the very same closing balance, it will be regarded as an opening balance in our next financial year. So therefore, you have to show the effect here. You're going to say balance brought down with the very same amount as your closing balance, right? 400,000. And we are done with our account. Then we are done with our account, guys. Let me just make sure that okay. Then we are done with our ledgers account, guys. We are done with our ledgers account. So before we can continue or move to our additional question, can you guys please prepare our note 3 first? Can you guys prepare our note 3 first? Let me just check this memorandum whether I did prepare a note 3 or I just did the calculations. Unfortunately, I didn't do the note, right? So I'm going to do the note with you guys. So let me just move to the question that consists in note, right? Where's my note? Where's my note? Where's my note? Where's my note? Okay, here we go. This is my note, right? So let us just start firstly with a land and building, right? So remember the land and building, it does not depreciate, right? The land and building, it does not depreciate, right? So my cost price and my carrying value at the beginning, it will be the same. So now you're required to fill in the A here. So I'm just going to remove A there and write the very same amount as my carrying value, because my cost price is the same as my carrying value. Why? Because of the landed building, it does not depreciate, guys. Right? Then let's come to the additional, like the information said here, guys. Let us just go straight to the information. On the 1st of December 2019, there was an extension of the building and the repairs, right? Then I said to you earlier, before the repairs, they're actually going to be recorded as our expenses. So meaning when we are required to prepare our income statement, this would be part of operating expense, right? As what as repairs. So it will not be regarded as an asset, but the extension of the building, it will be regarded as an asset. But we are not given the cost of an extension of the building. So therefore, in our note there should be something that will lead us to calculate or to come into conclusion of our additional assets, right? So let's check here. If you check here, your cost price at the beginning, it's actually less than your cost price at the end, right? Then remember, for us to get our cost price at the end here, we have to take what? We have to take out our cost at the beginning. We have to take out and add it by additionals, then subtract it by the disposal. That's whereby we can come across our cost price at the end. But then into this case, when we there was the land and building, like it was only additional. We did not dispose any of our land or the building, so therefore our disposal is going to be 0. But like then we were told that there was an extension into the building, right? So therefore we have to have additional here. So meaning now, according to this question, we are going to take our cost at the beginning plus additional, which is X, into this part, which is equals to what? Which is equals to cost price at the end, right? So because of our cost price at the beginning, it's less than our cost price at the end. Therefore, we may take into consideration that the difference, it will be recorded as an extension, right? So if we do the calculations there, if we do the calculations where we are going to take 1,600,000, subtract the 1,500,000, we will come across the extension as how much? As 100,000 according to my calculations there, right? So my additionals, they're always positive. They're always positive. They're not in brackets, please, guys. They're not in brackets. So I'm going to have my additionals here as how much? As 100,000. Then we're required to calculate the carrying value at the end of land and building. Remember, I said to you earlier before that land and building, it does not depreciate. So therefore, into our accumulated depreciation here, we're going to have our 0. So therefore, our cost price and our carrying value is the same amount. So here we are going to have what? We are going to have 1,600,000. That's what? As our carrying value and also as our cost price. I hope it does make sense. Then moving all along to our vehicle here. Moving all along to our vehicle here. So I'm going to move from Word to Excel because of it into Excel. That's why we did our calculations, right? So I'm just going to collect the very same information we have recorded there into Excel and passed it into my note tree, right? So as always, guys, please, your accumulated depreciation, it's always in brackets. Your accumulated depreciation, it's always in brackets. So remember, for us to identify our carrying value at the beginning, we have to take what? We have to take the cost at the beginning, subtract by our accumulated depreciation, which will give us what? It will give us our carrying value at the beginning. So into this case, we are given the carrying value at the beginning, then the cost is also given, but the accumulated depreciation is not given, which is X. So for us to identify the accumulated depreciation at the beginning, when we have the carrying value at the beginning and the cost at the beginning, we are just going to check the difference between the cost and the carrying value at the beginning. I hope it makes sense. So into this case, you're just going to take what? You're just going to take our cost price of 1,179,999 subtracted by the carrying value of 979,999. Then we'll come across our accumulated depreciation as 200,000. 200,000. Let me just try to make it small. Yes. Then now moving all along to the carrying value at the beginning for our equipment, right? So for us to get our carrying value at the beginning for equipment, remember the formula for us to get the carrying value is cost subtract by accumulated depreciation. Guys, what? Cost subtract by accumulated depreciation. Please don't forget that, right? So let's take our cost subtracted by accumulated depreciation to come across our carrying value. So into this case, my cost is 500,000 subtracted by accumulated depreciation of 80,000. Then I come across the carrying value of 420,000. 420,000. Sorry, 420,000. This will be my what? My carrying value. My carrying value. Right. Then let's move all along to our additional. Remember what I said to you when it comes to this additional? Additional, they're actually our cost price. Our cost price of the assets that were bought or bought during the current financial year that we are required to prepare our financial statements, right? So did we bought any of vehicle during the current financial year? Let's check our information that is actually based on the vehicle. So if we move all along with our information, according to this information, say a new vehicle was bought on the 3rd of September 2018, which is actually when actually during the current financial year of our 2018 to 2019, which is specifically the year that we are required to prepare our ledgers account or our financial statements. So guys, this it can be regarded, this 120,000, we can regard it as our additionals for our vehicles. So under our vehicles here, under additions, we are going to have 120,000. So now we are moving all along to carrying value at disposal, carrying value disposal, or disposal at carrying value, disposal at carrying value. Disposal at carrying value. Anyways, it doesn't. Okay, let's just leave it as a carrying value at disposal. But like then in short is disposal at carrying value, right? So very important thing to take into consideration. Carrying value at disposal or disposal at carrying value, it is always in brackets. What do we record here as under the carrying value as disposal? Under carrying value as disposal here, we record the carrying value of the sold vehicle or the sold vehicle. Let us go back to our Excel to identify the carrying value of the sold vehicle. So according to the information here, total given here, our carrying value as disposal, it was 68,992. 68,992. I hope you guys still remember how did we calculate that, right? So let me just pass it here. Doesn't want to pass. Okay, let me just check the number again. 68,992. How much? 68,992. That will be our what? Our carrying value for the assets that was disposed. For the asset that was disposed, right? Then now we are moving all along to our depreciation here. Moving all along to our what? To our depreciation, right? So this depreciation here is the very same total depreciation that we prepared our ledgers of depreciation, right? So remember, we have prepared what? We have prepared the account of depreciation for the vehicle. So this total that we're going to get here, if we take our depreciation of the sold vehicle, depreciation of the old vehicle, and the depreciation of a new vehicle, we'll just like add the totals and get what? And get the total depreciation of the vehicle, which is 197,219, 197,219, 192,219. Let me just confirm that I'm not good at cramming. 197,219, 197,219, 197,219. It is always in brackets, guys. Very important to take into consideration that my carrying value at disposal or disposal at carrying value and my depreciation and my accumulated depreciation too, they are always in brackets, guys. They are always in brackets, right? Then I'm going to move all along to my cost price at the end. My cost price at the end. Let me just like remove this thing, right? So that everything can be clear enough. Right? Let me just like move on to my cost price at the end, right? My cost price at the end, it will be the very same cost price. We have prepared our ledgers here, remember? My cost price at the end, it will be this part, right? Maybe I've said balance carried down. The very same amount like that is in my ledger account is the very same amount I will record in my note treat. How much? 1,119,999. 1 million. Sorry, in my cost price. 1,119,999. Let me just confirm it to avoid making mistakes. Yes, it is correct. Then my accumulated depreciation, like I said earlier before, it is where it is always in brackets. You see, like guys, how simple is this thing? Whenever like you prepared your ledgers account, when it comes to your note tree here, you're just going to like to transfer the very same information you've required here to your note tree. So in short, your ledgers account is actually the summary of note tree as a whole, right? So let's move all along to our accumulated depreciation. Our accumulated depreciation, it will actually be this amount. How much? 286,211, right? 286,211. 286,211, right? That's my accumulated depreciation at the end. Let me just confirm that to avoid making mistakes. 286,211, right? Then for me to get my carrying value at the end, remember the formula to us, it is cost subtract by accumulated depreciation, right? So I'm just going to take what? I'm just going to take my 1,119. Sorry, I have a lot of 9 here. Let me just remove 1. Yes. And subtract 286,211. Then I come across my carrying value at the end. That's how much? As 833,788. That's my that's my carrying value at the end. So guys, it's very simple. Make sure you master your ledgers account so that when it comes to your notary, you'll be able to transfer the information, right? Then let's check here. Remember what I said earlier before to you is that like when it comes to addition, we're taking into consideration what? Only the cost price of the assets that were bought during the current financial year that we are focusing on now, right? So did we bought any equipment during the current financial of 2018 to 2019? We cannot conclude that, but then we'll be guided by what? We'll be guided by our additional information. Let's check our additional information here. Our additional information, it says, where is it? It says on the 1st of June 2018, a new equipment with the cost price of 50,000 was bought, right? So we can conclude now that we have additional equipment that was bought during the current financial of 2018 to 2019 that was bought with the historical cost of 50,000, right? It is not in brackets, guys. Very important. Our additionals, they are not in brackets. Okay, then let's move all along to our disposal at carrying value. Remember what I said earlier before to you guys is that my disposal at carrying value, it is always in brackets. My disposal at carrying value, it is always in brackets together with what? Together with my depreciation and my accumulated depreciation. Very important. So let's just identify disposal at carrying value for equipment. Remember, we did the calculation in Excel here about what? About the equipment. So let us just jump into our equipment and get more information about the disposed assets, right? So according to the information here, we did calculate the depreciation and everything. Then 106, 106, 106, and 102,060. It will be what? It will be our carrying value for the disposed assets. 102,060. That's our carrying value for assets that were disposed, right? Right, this is what, this is our CV for the disposed assets, carrying value of what? Of the disposed equipment, right? Then now let's jump on to our depreciation. Remember, when we go back to our Excel here, we did not calculate the depreciation, or we did not make a specific account for the depreciation, right? But like then when you got your accumulated depreciation account, it will be easy for you to calculate the depreciation. So the depreciation that we're supposed to post in our notary or into our fixed assets note, it's actually this part, our old, our sold, and the new, right? So meaning we are going to add what? We are going to add all of this, right? We are going to add all of this depreciation of old, depreciation of sold, depreciation of new. It will give us our total depreciation for equipment. So meaning we are going to add, let's just grab our calculators and do the calculations. We are going to add that 1,065 by 7,290, and also we are going to add the depreciation of a new, which is 3,750, right? Then I come across the total of 42,105. Then that will be what? That will be my depreciation. 42,105. That's my depreciation for equipment, right? Then moving all along to my cost price at the end. my cost price at the end, my accumulated depreciation at the end, and my carrying value at the end. Let us just start first with our cost price at the end. Let's go back to our Excel. Then this is the summary of all the cost price of the assets that we have into the business. So this balance carried down here, it will be what? It will be our cost price at the end. So this 400,000 is the one that we're supposed to record where we're supposed to record it into our note 3 or our fixed assets note, right? So then let's move all along to our accumulated depreciation. Let us go straight also to our Excel. Let us go to our accumulated depreciation account. Then the very same balance carried down, it will be what? It will be recorded as our accumulated depreciation at the end. So meaning this 72,165, it will be recorded as our accumulated depreciation. 72,165, it is our accumulated depreciation at the end. 72,165. Then we are going to take the very same cost price that we've taken from our ledgers account, 400,000, subtract by 74,165 to get what? To get our carrying value. Our carrying value, according to my calculation here, it's going to be 325,835. 835. Then guys, we are done with our activity. I hope you guys will not face any difficulties again about depreciating an assets from the date of purchase to the date of sold, right? I don't think it will be a problem again. So let's just take a quick break. Then from our quick break, we'll be doing our additional question here. We'll be doing our additional question. So just take a break there. Don't take a coffee, don't take a drink, just grab your water.